to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas, and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution, because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forest on the land, that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabasaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, eConcrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing eConcrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
eConcrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. eConcrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, eConcrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed. It is Tuesday. This is the Bloomberg Interactive Brokers studio. We're also streaming on YouTube. May 11th, 2021. Stocks selling off and then they bounce back, Tim.
Yeah, just moments ago, the NASDAQ hitting positive territory, down, 0.1% now, but it's just been a wild day. It's recovered from 2% decline.
And I have to say that first 30 minutes, first 45 minutes, first 60 minutes was pretty impressive in terms of the sell-off and then the bounce back. So we're obviously market focused. We're going to talk about U.S. job openings, home prices surging. We have some economic news.
Yeah, what does the economic backdrop tell us about financial markets? That plus we are talking chips, Uber and Lyft losing the race, and also L Brands, what the company's doing with Victoria's Secret.
Yeah, they're they're stripping off Victoria's Secret.
It's your joke.
I was wondering if you would say it.
I wasn't going to.
All right, we're going to talk about a lot. First up, though, let's get you going on today's crazy, volatile trading day.
And I've got to follow that.
Sorry.
Oh, my
Go where
goodness.
you want.
Yeah, no, I'm going to retreat. I'll move in a different direction if you don't mind.
Smart man.
You know, where we're talking about the inflation story, I think the critical question is whether the expected increase that prices are likely to manifest will be sustainable. And if that's the case, will it force the Fed necessarily to tightening sooner rather than where the market is kind of trying to estimate that? Now, the chief economist at Goldman Sachs today, Jan Hatzius, was telling us the coming rise in inflation is likely to be transitory rather than enduring. This is basically aligned with the Fed's thinking, I think it's fair to say. But nonetheless, long-term interest rates are moving up just a bit. The 10-year Treasury just under 162. You guys were talking about this recovery in information technology. Shortly after the market opened, we had the NASDAQ comp down 2.2%. Now, of the 12 industry groups that make up the NASDAQ comp, healthcare is the only group that's actually pushing higher. And the NASDAQ composite now is down just 0.1%. Weakness in energy leading the S&P 500 down about 0.8%. And we have the Dow off from a record high by about 1.3%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Playing it safe, Doug Krisner. All right, let's get to your market drivers report. And let's set the Business Week agenda on this Tuesday. Kriti Gupta is with us, Markets Live reporter. She is here on the phone in our New York City bureau. Vince Signorella, global macro strategist at Bloomberg News, on the phone from White Plains. So, Kriti, let's start with you. Doug, breaking down those market averages. We've been bouncing around here a little bit.
Absolutely, you are seeing that tech underperformance, that what we started with on the day, now coming back. Who knew that we had this kind of turnaround story? And now, of course, you are seeing those big tech names in the green, up 0.3%. That's the New York FANG index. And, of course, the S&P 500 still down the red. So this is a really interesting story that the S&P 500 actually isn't gaining in line with tech, and that's going to be a really crucial pattern to watch as we move forward.
Well, let's see what Vince Signorella has to say about that. Vince, what are you guys talking about on the blog today?
Well, I have to say, the markets are a little leery about CPI number coming out tomorrow. The headlines expected to surge to 3.6% versus 2.6% last year, and this on back of producer prices in China jumping yet once again, as did U.S. and South Korea producer prices jump. So this is what's on everyone's mind: is inflation coming? Will the Fed have to move sooner? But I think the reality of the situation, and Kriti gets the pleasure of editing this when I finish it later, is that there's no wage pressure in the United States. And just about every economist in the U.S. will tell you, without inflation beyond the transitory period the Fed is talking about, is generally speaking a wage pressure. And without wage increases, any inflation may have to just back off a little bit, because even though there's producer prices going up, they may not be able to pass them along on a long-term basis.
But Vince, are we expected to start seeing some of that wage inflation given the jobs report last month and also what we saw with the number of job openings that exist now, record high?
Yeah, the job openings do exist, but people aren't really jumping in to fill them. I mean,
because they're not being paid enough.
Maybe so. I mean, that's the point. Will people start paying up in wages to get people back to jobs? And then the other side of the coin is, will we have to wait till September when school is full time and childcare is more accessible? Because people in that space, women and single parents in the space lacking childcare find it very, very difficult to go back to work no matter what the wage is paying, if it is less than what the childcare costs.
So I wonder, we've had some Fed individuals, former and current, Fed Governor Lael Brainerd saying the outlook is bright, that policymakers must show continued patience as Fed goals still far from its objectives. Then you had former New York Fed President Bill Dudley, he's also a Bloomberg opinion columnist, writing on the Bloomberg, also talking with our surveillance team, saying that the Fed will raise rates and move more than investors anticipate. So I wonder, Creedy, I don't know, tale of two Fed speakers, one former, one current. I don't know. How do you guys factor that into trading positions?
Well, absolutely. I mean, listen, we've been hearing this inflation talk for months and months. I mean, obviously right now we're pegging everything under the sun to these inflation fears, but it is worthy to keep in mind that there are other things going on while the Fed is on pause. So when we're talking about what the inflation read-through is, it's going to be a very different story when it comes to stocks or, let's say, commodities than it will be to 10-year yields, for example, or the dollar. And Vince can probably speak to the FX rate side of it, but I can speak to kind of the commodities stock side of it. When we're talking about stocks in particular, which is I think what I'm going to lean into here, given the action we've seen in tech, there isn't going to be that same inflation story for, let's say, tech, despite it being kind of these big growthy stocks versus, let's say, utilities or kind of consumer staples or consumer discretionary. Those are companies that can very easily pass on underlying commodity inflation to its consumers, for example, and you've seen a wave of those kind of headlines coming out of some of these major retailers. Kimberly-Clark, for example, Procter & Gamble are all examples of that happening. Tech, on the other hand, has a completely different narrative that they're working with. So when you're talking about positioning for something like that, tech isn't necessarily trading off inflation. Neither are some of these other sectors. They're going to be trading on how quickly can we get that underlying demand to come up, and then they're going to be talking about the borrowing ramifications.
Vince, something I wanted to ask you about, the so-called tick index, and that, as most people know, looks at stocks or compares them to those moving up versus down on a second-by-second basis. I'm reading from our Lu Wang and Vildana Hyrak, who put out a story, but apparently at one point this morning, the index went to a record low. It was when the NASDAQ 100 fell to almost 2%, I guess, at the open before bouncing back. But that was seen by some market watchers, chart watchers, as a sign of kind of early capitulation that then results in a recovery. Is that an indicator that you think is worth noting?
To be honest with you, most traders I speak to don't watch the tick index because it vacillates so much. I mean, you got your, as you mentioned, down 2,000 at the start, which was most likely, more likely than not, a capitulation of potentially margin calls as the tech futures opened considerably lower. But then a short time afterwards, we were up above 500 and then approaching 1,000. So it does move really, really, really fast. And a lot of it is machine driven, and it's really difficult. It's really difficult for something to hold on to unless you see a real consistent flow to it. And generally speaking, if you look at it, it looks like an EKG. It just goes up and down, up and down, up and down, and it's hard to really grasp.
Kriti Gupta, Markets Live reporter at Bloomberg News, joining us on the phone from here in a New York City bureau, and Vince Signorella, who's the global macro strategist at Bloomberg News. Vince contributes to the Macro Squawk Desk, a real-time curated news audio stream directly through your terminal.
Thank you, sir.
Go to
Take
it.
care.
That's SQUA. Go on your launchpad. Thanks, guys.
Good stuff from the guys. Let's do the bite of the day.
Let's do it. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
All right, today's number is 7. Gas stations along the East Coast are beginning to run out of fuel as the Colonial Pipeline races to recover from a paralyzing cyber attack that has kept it shut for days. An estimated 7% of gas stations in Virginia were out of fuel as of late yesterday. That's according to Gas Buddy. From Virginia to Florida and Alabama, stations are reporting that they've sold out of gasoline as supplies in the region dwindle and panic buying starts setting in.
Yeah, it's a wild story, and one that could take a few more days for that pipeline to get back on track. Once it does get into full operation, though, it could take nearly 15 days to move gasoline sitting in the Houston refining hub to the fuel-starved U.S. East Coast.
So it could be a couple of weeks of just some discomfort, perhaps.
Yeah, it could.
I'm just going to say. All right, let's get a check on world and national news over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, President Biden has been talking with Democratic and Republican governors this afternoon in hopes of learning some innovative ways to convince more people to be vaccinated. Governor Tim Walz of Minnesota told President Biden there is still some resistance to the vaccine in his state.
I think all of us know this is going to be a little longer process, but folks are coming along. So I want to thank you for highlighting this, and I want to thank the fellow governors for all the advice and good ideas they've been able to give to us.
President Biden has set a goal of having 70% of adults at least partially vaccinated by July 4th. Gas supplies are tightening up as the Colonial Pipeline is shut down for a fifth day. The pipeline carries almost half the fuel used on the East Coast. Patrick DeHaan, head of petroleum analysis at Gas Buddy, says if you can wait on gas, you should.
If motorists don't need fuel, they shouldn't need the fuel to rush out to the pump, and that's because Colonial has said that later this week. They expect the pipeline to be restored. So just like when we have seen this pipeline go down in the past, the last time in 2016, there's an end to this.
Colonial Pipeline has only managed to restart a small segment of the pipeline as a stopgap measure and does not expect to be able to fully restore service before the weekend. Militants in Gaza have been launching rockets into Israel for a second day, while Israeli planes have been firing missiles into Palestinian territory. The escalation follows weeks of skirmishes between Israeli security forces and Palestinians in Jerusalem. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, along with Tim Stanovic in our Interactive Brokers studio. So Anna Edney of Bloomberg News putting out a story about how pediatric researchers are investigating whether COVID-19 is becoming more severe for children now that variants are causing localized flare-ups, even as U.S. cases overall decline. So really, really watching kids here.
Yeah, by early April, the rate of COVID-19 cases in young kids and early teens began surpassing that of those 65 and older. That's according to the CDC. The latest CDC data suggests that the trend is continuing. At the same time, hospitalizations for children with COVID-19 are not falling as much as for those who are 18 and older.
Wow, it's interesting. One critical care doctor at Boston Children's Hospital, who's leading the CDC-funded research, said the big concern is that we've left a whole population of children unprotected. And so, particularly for kids who are probably vulnerable, right, and have underlying health conditions. And I know the CDC, the FDA, they're all working, forward to try and figure out who can ultimately get the vaccine. And we saw big news yesterday from Pfizer in terms of teenagers. But you're what? You're looking funny.
For the past year, the narrative has really been this is something that affects older people. And given the vaccine, right? And given the rollout of the vaccine, it suggests such that the older people are the most vulnerable. Now that those folks have been vaccinated, and more variants are emerging, the question remains as to what extent are kids actually vulnerable, not only to getting infected, but to severe repercussions of it. And I think it's a question for summer camp. It's a question for school reopenings.
It's a good point.
And it's a question for the priority of who gets vaccinated next.
Right, exactly. And it's interesting that if you think about the progression of a virus, right, it's constantly looking for a host, and the variants maybe potentially could get more infectious, more viral, if you will. And so you do wonder if then that changes the dynamics that when we weren't worried about kids, now we are worried about kids.
And just a reminder that we're living through this terrible science experiment, really trying to understand this virus as each day goes on.
Yeah, we'll see what Dr. William Hazeltine has to say about that. He's the president of Access Health International, someone who has seen a lot in his career, so we'll get him to weigh in on that. You're listening to Bloomberg Business Week, and this is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Well, motorists across a broad section of the east U.S. coast and the south are struggling to find both gasoline and diesel fuel. You know, it's been 4 days since the Colonial Pipeline closure after that ransomware attack. The goal is to have basically operations restored by the weekend, but at the moment, some filling stations are running dry. Now, to help ease the strain, the Biden administration has lifted some environmental regulations. They govern the sale of gasoline. This would be in effect for 3 states and the District of Columbia. Right now, the active gasoline futures contract is higher by about 0.3%. And if you look at crude oil, WTI right now, 65.20 in the electronic session, so we're up about 0.4%. Now, in terms of the equity trade, we do see energy stocks weakening, and that is pulling the S&P 500 down more than 1%. The Dow, meantime, is off from a record high by about 1.6%. Interesting story where information technology is concerned. The day began with a sell-off that sent the NASDAQ composite lower by 2.2% shortly after the opening. Right now, the NASDAQ comp weaker by just 0.3%. And actually, within the 12 industry groups within the NASDAQ comp, healthcare is pushing higher by about 0.5%. In the bond market, 10-year Treasury adding 2 basis points in yield. We're at 1.62%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, got it, Doug. Thank you so much. You're listening to Bloomberg Business Week. Carol Masser, along with Tim Stenovic in our Interactive Brokers studio. Let's get right to our guests because there's lots of stuff going on. Certainly watching the continued rollout of the vaccine and new developments, certainly when it comes to the virus. Dr. William Haseltine is back with us, Chairman and President of Access Health International. It's a nonprofit think tank on a mission to improve access to high quality and affordable health care for people everywhere. He has founded more than a dozen biotech companies, including Human Genome Sciences. His autobiography released earlier this year, My Lifelong Fight Against Disease from Polio and AIDS to COVID-19. And he's also got a book out. I don't know how he finds time to sleep, called Variants, The Shape-Shifting Challenge of COVID-19. He's back with us on the phone in Connecticut. Dr. Haseltine, good to have you back. How are you?
Carol, it's a pleasure to be here. Thank you for that very generous introduction.
I just speak the truth. Tell me how you're doing, and tell me when it comes to COVID headlines, vaccine headlines, what is it that you are constantly kind of looking out for? What's kind of front and center when it comes to the information?
To say is we're very fortunate to have great vaccines that are working really effectively and very safely, especially the mRNA vaccines. They're protecting people really well. They are as safe as any vaccine I've ever seen, and we're very fortunate. The biggest question for those is how long will they be protecting us, and how well will they protect us against the variants, and for how long? Today, this morning, we got the first shoe that dropped, and that is that one of the best of all the vaccines, the Moderna vaccine, doesn't protect against 2 of the common variants after about 6 months very well. Wow. At least as judged by the ability of the antibodies in people who were vaccinated to neutralize the virus. That's different from a real vaccine test. It's showing that it's failing to protect people in real life. But it's a pretty good indication that it's not going to protect people for very much longer. So the net result is also quite positive. In the very same report, it said, if you get a booster at 6 months, you're golden again. You're maybe better off than you were before. And so it's a good news, bad news story. Bad news, doesn't last that long against the variant. Good news, there's something to think. So what I've done is I put in my calendar 6 months from when I got my last shot, I'm going to get another.
So, I mean, do you think we'll start to see a recommendation from the CDC soon for that booster shot?
CDC has been a little slow in this pandemic, but I think they'll come to that position. And, you know, the first person to mention that was the head of Pfizer. You may remember that.
Yeah, just a few weeks ago, Albert Bourla saying that about the Pfizer shot.
And so he knew something that we didn't, but now we do, from the Moderna publication, which is 6 to 8 months out, fewer than half the people are protected against the Brazilian and the South African variant, according to these studies of antibody neutralization.
So if we don't pursue a course of booster shots for everyone, mark your calendars kind of thing, right now, could we potentially see another outbreak?
Absolutely. Because most of the viruses that are infecting people in the United States, and I should say around the world today, are variants. They're not the original strain. And the reason for that is the variants are more infectious and they displace one. We're now in the fourth wave of increasingly transmissible variants. First wave was what came out of China a year ago, February. It changed and swept the world. Then late summer, early fall, a whole bunch of new variants came and they displaced whatever else was there. And right now, the Indian strain seems to be displacing even the British strain in Britain. So this is a natural course that we're seeing faster than we expected. And it does mean that I believe we will be seeing recommendations for 6 months boosters pretty soon.
So does that mean, Dr. Hazeltine, that it's every 6 months, or is there a chance that Moderna and Pfizer are able to change the formulation somewhat slightly and actually give a shot that has longer lasting antibodies?
Until we get new types of vaccines, and I'm not sure how we're going to do that. There's some ideas on the drawing board. But until we figure out how to make vaccines that are going to last longer, it's probably going to be a minimum of every year and possibly more often.
I mean,
that's not the worst.
We're to the point now, though, where
better to be protected than not.
Right, and we're to the point now, though, where some of the healthcare professionals who got the shot in December would be approaching that 6 month mark. We only have about 20 seconds left, Dr. Hazeltine.
Well, you're correct. We're approaching the time when it's about time to get, and I should say, if you haven't got those 2 vaccines, the other ones you may need a little more often. So I think it's time to consider booster shots for the earliest people who are vaccinated.
All right, we're going to continue the conversation. This, as we see cases of COVID-19 topping 159 million globally, deaths exceeding 3.3 million, more than 1.31 billion doses have been given as of this date. We're going to come back to Dr. William Hazeltine, Chairman and President of Access Health International, also author of My Lifelong Fight Against Disease, From Polio and AIDS to COVID-19. He has seen so much. We'll continue with him in just a moment. You are listening to Bloomberg Business Week. It is Tuesday. I'm Carol Masser along with Tim Stanovic, and this is Bloomberg.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So we're going to continue talking about COVID-19 and the virus, but also about an idea, an antiviral drug cocktail that could help potentially India control the COVID-19 surge. We're going to get that from Dr. William Haseltine.
Yeah, he's chairman and president of Access Health International, among many other things, a writer. I am really interested in that because vaccines are certainly one way out of it, but they are slow to get there and they are slow to be administered. So treatment is key.
We know we need a big toolkit here to deal with this. Let's get back to your top business stories. Another check on that trading day. Here is Doug Krisner.
Hey, Carol. The equity market is at lower levels now. We are off the worst of the session. But it's weakness in energy right now that's pulling the Dow down about 1.5% and the S&P 500 down nearly 1%. I think the story of the day is the recovery that we have seen across the tech space. Shortly after the market opened, the NASDAQ composite was down more than 2.2%. Now, we know that tech shares have been knocked around by worries over a pickup in inflation expectations. That, should it manifest, threaten the outlook since this group's earnings prospects really are tied to the future. And at the same time, the question of whether spending on tech is going to slow and then, as a result of that, earnings perhaps would suffer. Our friend Ben Evans from Medley Global Advisors reminding us the importance of looking at specific segments of tech when making that call. The NASDAQ composite right now is only off 0.1%. 10-year Treasury picking up about 2 basis points in yield, 1.62%. In terms of the macro today, job openings in the U.S. surging in March to a record high. However, at the same time, the National Federation of Independent Business is saying its members continue to report difficulty in finding skilled workers to fill those positions. Now, with respect to Fed speak, Lael Brainerd, the Fed governor, and the Fed Bank president, Raphael Bostic of Atlanta, both kind of offering very dovish commentary today. We still have a long way to go in this recovery. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. I want to get right back to Dr. William Haseltine. He's chairman and president at Access Health International, author of several books, including My Lifelong Fight Against Disease. He is still with us on the phone from Connecticut. So let's talk about, you wrote a story and it talks about this antiviral drug cocktail. So tell us about what this is about and what this might do, especially for a place like India, which is really having a difficult time right now with COVID-19.
Well, there are two ways to prevent infections. One are vaccines, which are by far the most convenient. You get one shot or two shots, and you may have many months to many years of protection. Or if you're exposed, to take a drug cocktail that'll prevent you from getting infected for a week or two. Let me give you an example of something that happened last year. There's a new drug called Xofluza. It was developed by a Japanese company, now sold, I believe, in America by Genentech. And if you are exposed to flu, your kid comes home from school with the flu, you take that one pill and you have about an 80% chance. You reduce your chance of being. A week ago, there was some very, very interesting news that many of these makes 10, not 2. And so it's giving us the idea that there should be a lot of combinations of drugs, which together can be what's called synergistic, the 1 and 1 equals 10. The great thing about that discovery is India is the powerhouse for manufacturing small drugs and can produce these drugs, which in the United States cost about $80,000 for a 3-month treatment, cost maybe $35. In fact, do cost $35 for a 3-month treatment. So if you only need them for a few days, you're only talking about a couple of bucks per treatment.
So how would this work?
Add that, a couple of other drugs, and you're in good shape to help stop this epidemic, not only by getting vaccines, which are in short supply, but by using combinations of drugs.
Well, so how would this work in a place like India right now? How would they distribute this quickly, and how would they know who to distribute it to? Or is it safe to assume that the infection right there is so high that you can assume you've been exposed?
That's probably a pretty good assumption. I don't think there's enough drug right now. First of all, we don't really know what the right, these are pills. This isn't a shot. Remdesivir now has to be infused. And the drug that we now know works best with these hepatitis C drugs, they're pills, but it works best with remdesivir. There are probably other drugs that are being developed, molnupiravir by Merck and other companies, protease inhibitors by Pfizer and other companies. It'll take a while, but if I were India, I would do a massive warp speed trial to see what's working. And with so many people infected, you could get that answer in a month or two.
So essentially, rather than somebody getting the vaccine, they're given this cocktail, what, at first signs of it, or just in general?
No, or you're even just exposed.
You're exposed. Okay.
It's like with Zofluza, you don't have to be infected. You don't want to be infected.
Right.
So if somebody comes into your household, or you're at a workplace or at a school where people are getting the flu,
right,
you pop this pill, your chances about 80% decrease that you're going to get it. That's fantastic. And I think it's a whole different approach that we're going to have a big pharmacopoeia of anti-SARS-CoV drugs in about 6 months to a year. And I think that will be a good supplement. The great thing about those drugs also is resistance to vaccines, resistance to immunity is parallel and like a different world from drug resistance. So you get maybe the best of both worlds, vaccines plus these drugs, to protect yourself against all of these variants. I think a lot of good news is coming down the pipe.
Hey, just quickly, just 20 seconds though, Dr. Hazeltine. I mean, to be clear, that you take this pill and you're good for a couple of weeks, or is it longer than that?
Probably not longer at this point. It's taken us 30 years to get shots, which might protect us for 8 to 9 months from HIV.
Okay.
You've got to really be careful with long-term effects for long-acting drugs or people who are entirely healthy. But we can get there. We can get to a shot that'll last probably a year or more, but it'll take us some time. But we can get there with the drugs too.
All right. Yeah, we've said we've got to have a bunch of tools to do this. Dr. Hazeltine, thank you so much. Always appreciate checking in with you. Dr. William Hazeltine, Chairman and President of Access Health International. What are you thinking?
I'm thinking, how long are we going to be in this situation, right?
Forever.
Yeah, it's what it feels like. It feels like, my thoughts on it have evolved a lot.
But it's interesting, like he's saying, that you have multiple tools, because there are probably ultimately people who will not get vaccines. So how do you treat somebody who all of a sudden says they're exposed? So you want to prevent them from getting it, so they get maybe a cocktail.
Yeah, it's a great point.
Lots going on, and so glad we had some time with him. Let's, though, get a check on world and national news. Nancy Lyons in our 99.1 newsroom in the nation's capital. Hi, Nancy.
Hey, Carol. President Biden is taking additional steps to get Americans vaccinated and to meet his goal of 70% of the U.S. population having at least one shot by the 4th of July. He outlined some of the initiatives during a virtual meeting with a bipartisan group of governors.
Things like phone banking, door-to-door canvassing, pop-up vaccination sites in workplaces and houses of worship.
Biden says ride-sharing companies Uber and Lyft will provide free rides to anyone going to a vaccination site to receive a shot. Some of the nation's largest community colleges will host sites for local communities through May and June. He's also providing additional FEMA funds to communities to launch some of these initiatives. Senators are looking at recent high-profile cyber attacks to figure out what they can do to limit the damage. Ohio Senator Rob Portman says the cyber attack on the Colonial Pipeline shows the risk the nation faces.
This is potentially the most substantial and damaging attack on U.S. critical infrastructure ever. It shows that cyber attacks can have tangible, real-world consequences.
Gas supplies along the East Coast are becoming tight as a result of the ransomware attack on the pipeline, with some convenience stores and corner gas stations turning away customers as their tanks run dry. Russian authorities are not giving a motive in today's attack on a Russian school. Authorities say 9 people are dead, including 7 children. At least 21 others were hospitalized, 6 in grave condition. Reports from Russian media say that the gunman was a former student at the school. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar along with Tim Stenovic. We talk about the streaming wars, but now it's the influencer wars.
It is. It's like TikTok versus Instagram versus YouTube and more.
Yeah, exactly. So here's what's going on, folks. Mark Bergen of Bloomberg News putting out this story. YouTube said it is starting a $100 million fund for creators of video shorts. It's the company's feature that rivals TikTok. In a departure for the online video giant, creators will be paid based on viewership and engagement rather than advertising revenue, which has been the model.
It has, and it's worked really, really, really well for a handful of people. Yes. I mean, people who have so many views that they are making serious money, and we're talking millions of dollars just on advertising. But if you think about it, TikTok is actually, it's something that's compared a lot to Instagram, but it's much more similar to something like YouTube because of the way that the algorithm actually serves something that it thinks that you'll be interested in next. It's kind of happens on YouTube as well. It's like this environment that's, it's much less about, for the vast majority of people, creating the content, and much more about consuming the content, similar to YouTube.
Well, and what's interesting is that you've got, as you said, they're all doing it. So you've got YouTube doing it. You've got Snap launched a new fund last fall for top performers of its video product. Facebook has tried to lure stars and copied some features from TikTok and introduced more ads on its shorter videos. So there you have it. They're all going after it. But listen, the pandemic showed us, right, how popular these short videos were.
Yeah, and one thing that's interesting about this, not past tense yet, Carol. The company has been doing this for years because it has split ad sales with its video makers for over a decade, and it has generated $19 billion in ad sales last year, as well as many moderation hassles, as Mark points out. In 2018, YouTube restricted the number of creators after a flurry of brand safety mishaps, and it really hasn't landed on this revenue model for shorts quite yet.
Yeah, listen, I think people are looking at how individuals are consuming media, right? It's, YouTube is this vast thing, but I think we saw that people are much more interested in these like little snippets of video.
Hey, maybe you're watching us on YouTube right now.
Hi, everybody. All right, you're listening to Bloomberg Business Week. They took us off. We were on, and then we were gone. What happened? This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market is continuing to struggle today. Weakness in energy shares pulling the Dow Industrial Average down about 1.5%. We're off from a record high, by the way, and at the same time off the worst levels of the day. Information technology struggling to recover from some steep losses earlier. Shortly after the opening bell, NASDAQ Composite was down 2.2%. Right now, the index is weaker by just 0.2%, and we have healthcare stocks within the NASDAQ comp pushing higher, the only one of 12 industry groups in the NASDAQ to be positive. While we're talking about technology shares recovering, I should say, Apple remains a little bit on the back foot here. The company is now facing a lawsuit in the UK over claims it overcharged nearly 20 million British customers for App Store purchases. Apple shares right now the most active, down about 1%. And it's showing up in the S&P 500. Information technology week today, along with energy, as I mentioned, S&P down about 1%. In the bond market, on the other hand, long-term interest rates moving higher with a 10-year Treasury yielding 1.62%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, got it, Doug. Thank you so much. So there's a story in the upcoming issue of the magazine. It's out later on this week on newsstands, online on the Bloomberg, about how the company that's become the leader in the most advanced types of semiconductors on the market today is, Tim, stuck in the middle of a global panic over chip supply.
That company, TSMC. Joel Weber is editor at Bloomberg Business Week. He joins us now on the remote from Brooklyn. And Joshua Brustein, technology writer at Bloomberg Business Week, joins us on the phone from New York City. Joel, I was pretty shocked to read how much Samsung and TSMC, Intel, are spending designing the next generation chip business, given that here we are now in this global supply crunch.
Well, billions, and the number, even like the number that we've seen from Intel, the 20 billion that they want to throw at the Arizona project, seems paltry when you compare it to the big numbers that the TSMCs of the world throw around. And, you know, TSMC is I think, pre-chip shortage, there are probably a lot of people who had no idea who that company was. And, you know, if you're in the tech business, TSMC has quietly become just a juggernaut over the past couple of decades. And so I think a lot of people suddenly woke up to the realization that this is a huge powerhouse company in the midst of the chip shortage. And what the story that Josh edited in this week's issue is about is effectively TSMC sort of finds itself in the middle of now a game of geopolitics that looks really complicated. So Josh, what did our reporters discover as they dug into this story?
Yeah, so the TSMC story is interesting. This is a company, as Joel said, that was really unknown outside of tech circles until very recently. And it pioneered a process for making chips where it would allow its customers to design the chips and then it would manufacture them. This is different from companies like Intel, who were handling the entire thing. And this really was a revolution in the chip industry. TSMC's real big break came when it began manufacturing chips that Apple was designing for its iPhones. And that allowed TSMC to really learn how to make the most sophisticated chips on the market. And that's been a great business for it. It is an enormous company. It's very important throughout the global tech industry. And now, with the chip shortage, you're seeing officials really across the globe worrying about their supply chains and, in a lot of cases, wanting chips to be manufactured closer to home. The thing for TSMC is that almost all of its highest level chips are made in Taiwan. And so it's going to be facing increasing pressure from places like the United States and from Europe to evolve into something that it never has been.
Right. And closely tied, as you just said, to Taiwan, which kind of puts it also in China's grasp. And I do wonder how that also kind of complicates things, Joshua.
Yeah, I think when you're talking about Taiwan and the West looking at Taiwan, I think there's a bit of nervousness that it is very close physically to China, that you might be a little bit nervous about your long-term prospects of relying on something of strategic importance that happens really in China's backyard. And TSMC, it has its own interesting relationship with China. It's also not making its most sophisticated chips in China, and China wants to have its own chip industry as well.
So I'm wondering where this leaves the companies that it supplies chips to.
Well, I think that the companies who rely on TSMC for chip manufacturing are probably pretty happy with the way that this works. They get to design the chips. They don't have to build these multi-billion-dollar factories where they're made. And, I think that there's interest in having TSMC continue to do that, but maybe in a way that will make companies and policymakers outside of Taiwan or not that close to Taiwan just a little bit more comfortable with the prospect of supply shocks.
Yeah, I think one of the things that is interesting about this is that you have a ton of different countries all wanting to throw their weight around, whether it's the U.S. or China or Japan, and ultimately you have Taiwan here, which is basically, this is like one of basically the biggest company that Taiwan has. And so, Josh, one of the things that stuck out to me as I was, thinking about the capital expenditures and everything else that, the competitors that would want to try and steal back some market share from TSMC are wrestling with here is ultimately TSMC is the one with the leverage, right? You can't just spool up one of these factories and do it overnight. You have to be thinking decades out here. So to some extent, they have the cards, right?
Absolutely. TSMC has a big head start on most of its competitors when it comes to making the most sophisticated chips, and that's going to give it a lot of leverage. But as you also see, as national governments want to throw around money as well, that is a potential opportunity for TSMC. It's also a potential opportunity for some of its competitors to close the gap, but closing that gap is not going to be easy or even a foregone conclusion that it will happen.
Okay, I got one more for you, Josh, which is I thought the lead of this story was super interesting. To give you a sense of how long TSMC has been around, can you rewind the clock and tell us what we found out?
Yeah, so the lead of the story starts with Morris Chang, who is TSMC's founder, who was born in China, but actually spent the early part of his career in the United States. And he recently was reminiscing about a industry conference he went to in 1958 with the
long time ago.
with the founders of Intel, who were not yet the founders of Intel because the company had not yet been founded. But he remembers going to this conference, going out and having beers with them, and as he put it, singing arm in arm all the way back to our hotel. So these guys have known each other for a long time, and that the basic foundation of the chip industry has been around for quite some time.
And they felt favored by the gods.
And
love that.
Exactly.
As Debbie points out in the piece, Intel passed up a chance to actually invest in the 1980s in TSMC.
It's just fascinating, and I feel like we're not quite sure how the chips may fall or lie or whatever.
I like it, Carol.
Going forward. Great reporting. Debbie Wu, of course, the reporter who did this story for Bloomberg Business Week. Joshua Brustein, though, tech editor at Business Week, giving us the details, along with Jill Weber, editor of Bloomberg Business Week magazine. All right, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. And you had a great idea at our planning call, said, we got some really wild economic news. We need to kind of lay it out for everybody.
We did. What does it mean, these jobs numbers? People aren't actually doing the jobs, even though they're available, and then housing prices off the charts.
Yeah, exactly. We're going to break it down with our own Carl Riccadonna right here on Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
3 p.m. on Wall Street. We're an hour before the closing bell, and it looks like the equity market is struggling to turn positive. Now, interestingly, the NASDAQ composite, which began the day with a drop of more than 2%, has been recently fluctuating between gains and losses. Right now, we're off about 0.2%. The Dow is off from a record high by 1.3%, and in the broader market, its weakness in energy leading the S&P 500 down about 0.9%. Information technology, as I mentioned, was or has been able to recover a bit from those steep losses earlier. This group as a whole has been buffeted by worries about a pickup in inflation expectations. That would certainly cloud the outlook, since the group's earnings prospects are far into the future when you look at the way the market discounts that data point. And at the same time today, the question of whether or not spending on tech will slow and whether earnings could possibly suffer. So having said that, Ben Emmons from Medley Global Advisors reminds us of the importance of looking at specific segments in technology when making that call. As an example, Apple today down by just about, well, let's call it 1%. The company is now facing a lawsuit in the UK over claims it overcharged nearly 20 million British customers for purchases made in the App Store. In terms of WTI crude oil right now, we are trading higher by about 0.7%, 65.35. Motorists across a broad section of the eastern U.S. coast along with the American South are struggling to find gasoline and diesel. It's been 4 days since the coastal pipeline closed after that ransomware attack. Now, the goal is for restoration by the weekend, but at the moment, some filling stations are running dry, and we have the actual gasoline futures contract, the most active contract, higher by about 0.4%. 10-year Treasury right now yielding 1.62%. I'm Doug Krisner, and that's your Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Top story at this hour. I feel like it's constantly a top story, and that has to do with the U.S. economy. And sometimes, Tim, those conflicting economic signals, especially after Friday's much weaker than expected monthly jobs report. And then we got a couple of reports today that were actually pretty powerful. Bloomberg opinion columnist and former Federal Reserve Bank of New York President Bill Dudley, he was also former vice chair of the FOMC. He expects the Fed will need to move quickly once they start hiking rates in order to control inflation, and will subsequently end up raising rates above what markets have priced in. He spoke with our Bloomberg surveillance team this morning.
You know, the Fed's view is if we tighten and the stock market goes down at some subsequent period of time, that will tighten financial conditions, and we may then not have to tighten monetary policy quite as much. But they agree that markets are frothy, but they're looking through that. They're determined to keep rates low until they actually get a lot more people back to work.
Determined to keep rates low until they get a lot more people back to work. That was Bloomberg opinion columnist and former Federal Reserve Bank of New York President Bill Dudley. Let's now bring in Carl Riccadonna, Chief Industry Economist at Bloomberg Intelligence, joins us on the phone from New Jersey. Carl, we wanted to get you on the show today to help us make sense of some of the economic data that we got today. U.S. home prices surged the most on record in a buying frenzy. And then also that JOLTS data that we got earlier today, showing how many jobs are actually open right now. Help us make sense of all this.
Sure, absolutely. Good afternoon. Let's start with the JOLTS data. Those JOLTS figures, that's telling us openings for hire in the economy. Now, that's March data, and of course, last Friday we already looked at the April jobs report, so there's a little bit of lag in that series, but it still is telling us something important about underlying dynamics in the economy, and that tells us that the jobs are certainly there. Folks simply aren't being matched with those jobs at the pace that economists were expecting prior to last Friday's jobs report. And there's a number of reasons for that, so we shouldn't just jump to very quick conclusions about one particular factor or another.
Okay, so give us a few of those reasons.
Okay, well, the main factor that folks like the U.S. Chamber of Commerce and a lot of Republican politicians have cited is the jobless benefits expansion that was put in place as part of the fiscal stimulus measures. So that provides an additional $300 of unemployment support to families impacted during the pandemic. And so we've heard the Chamber of Commerce, a number of governors, and several other politicians saying that people are being paid more to stay home than to go out and look for jobs. And that may be true in a specific cohort of the labor force, but that is not true across the board. As we look into the details of the report, right, the devil is always in the details.
Right.
And as we start to dig through what happened in the economy in the last jobs report, it doesn't really agree with that type of assessment, because we saw big hiring gains in sectors like leisure and hospitality, which tend to be lower paying sectors. And in higher paying sectors like construction and manufacturing, actually we saw a stagnation of job growth. Now, part of that is a semiconductor chip shortage that is having such dire consequences on the auto sector, but that doesn't fully explain what's happening.
Interesting. And like you say, the devil's in the details, and we get smarter always when you stop by and break it all down with us. So I feel like, almost every day, Carl, we go in and with our team on, the TV side when we do Beyond the Bell and we look at the markets, that we are constantly bringing up the inflation concerns. And that was certainly the market write-throughs this morning, that tech was down on inflation concerns. Should we, as investors, be worried about inflation rearing its ugly head anytime soon in the next 6 to 12 months?
Well, I have tremendous appreciation and respect for former New York Fed President Bill Dudley, and I agree with a lot of his assessments on the economy and the outlook. I don't agree with his most recent assessment. I don't think that there's a good reason to expect the neutral Fed funds rate to be higher in this cycle relative to the prior cycle, because in fact, if we look at every economic cycle going back really to the 1970s, that sweet spot for the Fed funds rate has been lower and lower in every cycle. So I think that there's certainly a need to contemplate the potential risk of higher interest rates in this cycle than what people might be anticipating at the moment. But I don't think that's going to actually play out to be the case. We're in a relatively low inflation economy. Certainly we could see a period of high inflation as we reopen the economy. The economy is going to grow at about a 10% pace in the current quarter. When you take an economy geared to grow about 2% on a sustained basis and force it into top gear and redline it at 10% growth instead, of course you're going to get there for a short period of time.
Wait. You broke up there. Of course we're going to get what?
Of course, we're going to see, a hot spell of inflation for a short period of time, but I don't believe it will be sustained. Really, as we think about inflation dynamics in the economy, you cannot have sustained consumer price pressures without workers seeing that same inflation pressure in their paychecks. And of course, that may be happening in certain sectors here as we reopen it.
Right.
But we have to ask ourselves, has the economy really changed its fundamental way of operating? And workers don't have a lot of bargaining power in the U.S. economy due to the threat of technology, globalization, low unionization rates. All of these factors mean that for kind of low and medium skilled workers, they don't have much bargaining power. And that means that ultimately they don't have much bargaining power at the cash register either.
And the JOLTS data that we got today, coupled with the with the jobs report that we got last week, that doesn't change your opinion of that at all. And we just got about 30 seconds.
It doesn't change my opinion of that. It tells me that there's frictions, and one is the unemployment benefits story we talked about. The other factor we have to consider, only about 60% of large school districts have reopened for in-person learning, which means that a lot of parents are still stuck at home and can't look for jobs because they're tending to kids learning on the iPad.
Yeah. Like we say, the devil's in the details. Cora Cadana, thank you so much. Chief Industry Economist at Bloomberg Intelligence on the phone in New Jersey. I think it was really interesting what he had to say about, those April jobs data, the numbers we got on Friday, big hiring in leisure and hospitality. Those are lower paying jobs. Those would have been the jobs that you would have thought because of the extra stimulus, they might have been making more money by staying home.
Right, changes the narrative that we've heard.
Yeah, exactly, which is why it's so important to check in with him.
Let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim, the Colonial Pipeline could be turned back on by tomorrow evening. The line, which supplies almost half the East Coast's gasoline and jet fuel supply, has been shut down since Friday due to a ransomware attack on the company's network. Energy Secretary Jennifer Granholm says when the pipeline is back in operation, it will take some time to return to normal operations.
There is fuel in the pipe, and then there is fuel, the offtake from the refineries that have to be added. So it will take a few days to be up and running.
Granholm says the administration will have no tolerance for price gouging. Virginia has declared a state of emergency, which will give the state and local governments flexibility to ensure there are adequate supplies by using lower-grade fuels. Well, the spotlight has been on a federal election reform bill in a Senate hearing today. Majority Leader Chuck Schumer says recent GOP state voting laws carry the stench of oppression.
Don't tell us these laws are about strengthening our elections. Shortening the early vote doesn't strengthen our elections. Limiting the number of drop boxes doesn't strengthen our elections. Criminalizing food and water to voters doesn't strengthen our elections.
Minority Leader Mitch McConnell calls the sweeping Democratic legislation a partisan effort to take over the election process. Well, a man accused of killing 8 people in shootings at 3 Atlanta area spas has been indicted on murder charges. 6 of the victims were women of Asian descent. A Fulton County prosecutor says she will seek hate crime charges. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. And talk about the New York City mayoral race. It is quite a lineup.
It is. Yeah, I got to tell you.
What?
I got polled the other day. Like, I got a call from a pollster, and they went through the list of all the mayoral candidates. And I was like, I don't even know every single candidate who's offered here.
There's a lot.
There are a lot.
There's a lot.
And I just did the poll for my own research, by the way.
What do you
Yeah, I've never been polled before.
Oh, okay.
I felt so special.
You are special.
Thank you.
So Craig Giammona putting out a story, and I guess Sean Donovan and Ray McGuire, 2 of the candidates seeking to become New York City's next mayor, I guess were asked about the cost to buy a home in Brooklyn during recent interviews with the New York Times to weigh endorsements in the race, and I guess they didn't do so well.
Yeah, and look, I got to tell you, this went totally viral. I got a text about it from my brother who lives in Seattle earlier today. He sent it to the entire family chain.
Was he like,
he thought it was hilarious. He thought it was hilarious.
He's like, Tim, you said it's really expensive where you live. It's not that expensive.
Oh, there is. There's a you can get something for $100,000 where I live, but it's a parking space.
Oh, okay.
Yeah, it's that went viral as well. That's in Brooklyn.
So McGuire, former Citigroup executive, guessed at the median sales price in the borough. Now, median is when you cut it in the middle.
Yeah, not
median
the average.
is an average, right? And so he said the median sales price in the borough was $100,000. Wrong.
Yeah,
or was
off
it?
By a lot.
Donovan, a former city housing commissioner, cited $80,000 to $90,000. Wait, what?
What do you think it is? All right, $900,000.
About $1 million. $1 million
is the median.
Yeah.
Catherine Garcia, the former city sanitation chief, whom the Times ended up endorsing for mayor, guessed $800,000, and Maya Wiley came in at $1.8 million.
Former presidential contender Andrew Young, he nailed the correct answer with that $900,000.
He's a data guy.
Yeah. Listen, it's you got to know your market. Got to know the city that you're going to
$100,000 for a house in Brooklyn. Wouldn't that be nice?
I'll take 10. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We're just under 43 minutes until the closing bell. A little bit of weakness in the equity market, but the major indices are well off the worst levels of the session. Want to get you the very latest now as we cross to the Bloomberg Macro Squawk Desk and Bill Maloney. Hey, Bill.
And good afternoon, Doug. U.S. stocks under pressure from the start today, although, like you said, NASDAQ has paired losses. Dow's still down 500 points. S&P's dropped 40, and NASDAQ is lower by 23, was down as much as 294 points. The U.S. 10 yield at 1.62%, gold little changed, and transports dropped 213 points. Among the main 11 S&P sectors, only materials were in the green. Energy and real estate were under pressure. And leaders to the upside in the Dow, Salesforce and Nike, while Home Depot and Chevron led to the downside. After earnings, Hanes Brands fell 12%. And in other news, Southwest Air flies jet fuel to Nashville to help bolster supplies. And soybeans hit their highest level since 2012. In deal news, American National to explore options, including a potential sale. And wrapping things up, some of the names pointing after the bell tonight include Electronic Arts, Fubo TV, and Lemonade. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
All right, Bill, thank you. And, of course, that all-important CPI report tomorrow, 8:30 a.m. Wall Street time. Special coverage for you here on Bloomberg Radio. Right now, the 10-year Treasury just under 1.62%. That is your Bloomberg Business Flash.
All right, Doug Krisner, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. And in this week's Business Week Small Business Survival Guide, cash is king once again at small business. Who'd have thought, right? Because it's like Tim been all in when it comes to digital.
Yeah, especially at the beginning of the pandemic when nobody would touch cash. Rob Mandelbaum is freelance contributor at Bloomberg Business Week and joins us on the phone from Brooklyn. Rob, this is something I run into because I do drive. So I go and I fill up my car in Brooklyn. And it's always like 10 or 12 or 15 cents cheaper per gallon. So here's something about me. I fill up with cash all the time because I don't want to pay that extra fee. But as you report in Bloomberg Business Week, this is starting to spread to other types of stores as businesses tire of those swipe fees, which add up to a lot of money.
They certainly do. Businesses have complained about swipe fees for decades, and credit cards, as you mentioned, are just becoming more and more the currency of the moment. I talked to one restaurant. 98% of its sales were credit card sales. So those swipe fees really add up for places like that.
Yeah, in 2019, swipe fees for credit card transactions, you report, amounted to $93 billion in the U.S., or 2.2% of credit card sales. So how is this playing out at mom and pop stores throughout Brooklyn?
Well, throughout Brooklyn and throughout the rest of the country, there are payment processors. These are the people who sort of connect the merchant to the banks that sort of handle credit card transactions. Payment processors are approaching merchants sometimes and saying, we have a way to lower your fees to zero, and we do that by making the customer pay them.
That can be very difficult, though, if you're a business and you don't necessarily want to be the one who's necessarily charging more for something because you want to provide the customer with the cheapest price.
It depends, right? If you're a restaurant that provides a particular, a particular experience or a particular kind of food, people who go to restaurants because they like the food might be willing to go to pay that extra 4%. If you're the only fish merchant, in walking distance, people might suck it up and pay credit cards. Most people do, in fact, just absorb the fee.
So how important, first of all, is small business to all of these credit cards?
Oh, not very important, Carol.
Yeah.
I mean, they would disagree, of course. Don't forget, shop small on Saturday. But the vast majority of credit card transactions take place at giant retailers. At the Costco's, the Walmarts, the Sephora's, the Target.
Right. No love lost between credit cards and small business. What's interesting too, and I didn't know, and in your story you talk about, we get those cards that give us rewards and cash back and travel points, and merchants are the ones that ultimately are paying for those benefits for consumers.
That's right. And they're much more expensive for merchants than other cards. It could be the difference between paying a 2% transaction fee and paying a 4% transaction fee, or 4.5% or 5%.
So do customers seem okay with the way this is going?
According to the merchants, the credit card companies will tell you something different.
Right.
According to the merchants, Tim, yes, customers understand, and they understand that they're paying for the convenience of paying for credit cards. A couple of the merchants told me that they had took criticism from customers at the very beginning, but they quickly sort of came around.
So I wonder if this leads to some sort of resurgence in cash. I mean, I got to tell you, it actually has for me. Now that I'm driving and I'm filling up my car, like I'm making sure that when I go to the gas station, I actually have cash. But for so long, the story has been that, with the rise of fintech companies and Venmo and credit cards becoming ubiquitous with Square, cash was going to die.
The restaurants and stores, because they were both restaurants and stores that I talked to, did not see an appreciable uptick in cash transactions. Some saw some uptick in cash transactions, but by and large, credit cards held their ground even with the fees.
So I think what it sounds like is I'm cheaper than everybody else.
I'm sorry, say that again?
I'm cheaper than everybody else. Like I don't want to pay for the convenience. I want to get the cheapest price.
Well, you're not cheaper than me, Tim.
Okay.
Because I'm the same way.
Finally, a man after my own heart. I appreciate it.
But I think about it too when it comes to tipping and things like that,
Yeah.
right? Because percentages are taken out. So I do try to have a little bit of cash.
That's an excellent point.
Right? Because an individual or a server gets less because the credit cards take their fees, correct? Right?
To be honest, I don't know if restaurants
take it out.
Take that out, but it wouldn't surprise me if they did, for sure.
Yeah. Anyway, it's interesting, and listen, we're still finding our way through when it comes to the impact of the pandemic, what's lasting. All I know is I have gone digital big time when it comes to payment with everything.
Yeah, especially with the tap to pay with credit cards, with phones.
There was even someone, my daughter was telling me a story about someone who was asking for money in the streets, and they're like, somebody said, well, I don't have any cash, and they're like, well, I've got Venmo.
Yeah, it makes sense. Because all you need is a smartphone and a bank account.
Exactly. Interesting story. Rob, thank you so much. Really appreciate it. Rob Mandelbaum, he is Bloomberg Businessweek contributor on the phone in New Jersey. Check out that story in the magazine and all of the coverage when it comes to small business and the survival guide. You can find more at Bloomberg.com. You're listening to Bloomberg Businessweek right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So an interesting story, another story that you actually brought up on our planning call by our own Lizette Chapman about Uber and Lyft.
Yeah, it's about the ride-hailing actual contractors because they're not employers, some of them, but very few at this point using electric vehicles. And Uber and Lyft, they have ambitious climate goals, but they're not actually helping these contractors buy those electric vehicles.
Right, and in the meantime, making an impact on the environment. Yeah. So, all right, we'll get into this story in just a moment. In the meantime, back to your top business stories. A check on that trading day, 29 minutes to go, Doug Krisner.
Yeah, I want to begin with this hot headline crossing the Bloomberg terminal, Carol. The federal judge has ruled against the National Rifle Association in its bid to reorganize in the state of Texas after declaring bankruptcy. We'll try to keep track of the very latest details on that story coming up here on Bloomberg Business Week Radio. So the technology space has been under a fair amount of pressure through the day. We were much, much lower earlier. Right out of the gate, the NASDAQ composite fell more than 2%. The index right now is off just 0.2% as we make our way to the closing bell. But really, it's about weakness in energy leading the Dow from a record high by 1.5%, and the S&P 500 now lower by 1%. I want to focus very quickly on shares in Apple. Stock is down about 0.8%. Now, the company has been seeing surging average selling prices for its iPhones. This is consumers' shift to more expensive models. However, today an analyst over at Bernstein was saying the trend may not be repeated next year. And at the same time, there is this from Reuters. Foxconn has cut Apple iPhone 12 production in India by more than 50%. Workers there have been infected with COVID, and they have had to leave the Foxconn factory. Again, Apple shares down about 0.8% right now. Long-term interest rates pushing a bit higher. 10-year Treasury yielding just under 1.62%. Crude oil is up about 0.8% right now. The active contract in the electronic session, 65.40. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, appreciate that update, Doug. So, Tim, this was a story I think you covered on Quick Take today as well about how Uber and Lyft are losing the race when it comes to the electric future.
Yeah, Lizette Chapman is Bloomberg News technology reporter. She joins us on the phone from San Francisco. She and our colleague Ben Elgin have this deep dive into Uber and Lyft, what they're doing or what they're not doing, I should say, in order to help their drivers here in the U.S. actually get toward that sustainable future. Lizette, thanks for joining us on this. First of all, lay out Uber and Lyft's climate goals and what they're actually trying to achieve this decade.
Sure thing. So earlier this summer, after years and years of pressure from different environmental groups and just increasing academic research showing their impact on the climate with this, what was supposed to be the future of transportation, first Lyft and then Uber, both committed to being 100% electric on the platform in the United States by 2030. So that was the pledge they made. So Ben and I decided to dig in and take a look and see how those efforts were going.
So how are they going?
Not so great. It is a long process, and it involves a lot of different shareholders, obviously policy makers, auto manufacturers, and of course the infrastructure with, to support the charging stations so that these drivers can, continue to do their job and not waste, time that they would take to charge. But the net of this is that they've made this pledge to be 100% electric. And right now, the percentage is 0.5% of ride-hailing companies are now electric vehicles here in the United States. And that's less than the 0.7% of overall in the United States passenger cars. So basically, we're going to have to see adoption outpace the general population by about 10x in order for them to hit these 2030 goals. And it's pretty expensive to still purchase these vehicles.
Right.
There's still thousands of dollars more, even after lower, plummeting battery costs and government rebates and all this. So, Uber has set up some programs to try to help drivers by offering incentives. Lyft is offering no financial incentives. But, in this article, we take a look at different ways that they're approaching it. And, our conclusion was that the efforts so far have been tentative, incomplete, and sloppily executed.
Well, let's take us through some numbers here, Lizette, because your story opens with an anecdote about somebody named Kurt Kinder and his Chevy Bolt. He only spends about $5 per day on electricity to charge his car. As you point out, the $13 difference amounts to over $13 difference amounts to over $3,000 per year, and that is money that he gets to keep.
So $5 with an EV versus 18 is what he would have charged on gas.
Exactly, what he would charge for gas. And plus, it doesn't even take into account the maintenance costs that are associated with internal combustion vehicles, which are more, in some cases, than EVs. So what is the economic, is it just the initial outlay that's so expensive?
Yeah, that's it, Tim. It's just still thousands of dollars more to purchase these EVs than it is for a gas car. And so a lot of these drivers, if it is a part-time job or they're only doing it a couple of hours a week, just to and from, their jobs or as a side hustle or something like that, sometimes they can afford it. We talked to a number of Tesla drivers. I talked to a gentleman here in Oakland who had a Tesla and was driving for Uber, but he got frustrated after a while because he wasn't getting any of the bonuses that he had been promised. And that Uber had said that, they would give $1 bonuses for every single electric vehicle trip that one of their drivers made. This is ostensibly to help them make the transition, to encourage them to do it. But the upshot was that when we started, doing some reporting and talking to electric vehicle drivers, a large number of the ones that we spoke to had never gotten these bonuses. So we gave that list to Uber, and they checked into it and found that a technical glitch had occurred. They apologized, and they immediately made the payment and the retroactively, as well as a 10% bonus. And then, we kept reporting, and then we found, hey, some of these drivers still aren't getting the bonus. They got the first bonus, but not the second one. And so we called them again, and then they made it good with them there. So it's been tricky, and there has been a pattern of that also in with the Sacramento pilot program plan that they had, where drivers had a hard time signing up, and then oftentimes never collected these bonuses, which during that time back in 2018 was $2. And then also in London as well, they just recently cut how much they were giving drivers there under this clean air plan.
Hey, Lizette, only got about 30 seconds left here, though. Ultimately, though, won't Uber and Lyft have to figure out a way to get more EV vehicles in their fleet because of carbon emissions and controls and concerns and more regulation? And just real quickly.
Yeah, there is definitely pressure, but it's state by state. Here, California has its clean mile standard that's coming into effect, to push them to do that by 2030. But it's so far this is voluntary. So, and it's going to take more. Like in China, real quickly, I know we're running out of time, but in China, Didi, they're at 20%, but they also have the support of the Chinese government, of automakers and the like. And Ola is nowhere near its goal. Cabify as well. And Grab has in Southeast Asia doesn't have any goals.
All right, good stuff. Everything Lizette does has so much
awesome.
information. Go to Bloomberg.com and read the story because it's so good. Lizette Chapman, of course, tech reporter here at Bloomberg News.
Let's get to Nancy Lyons for a check of world and national news. Hey, Nance.
Hey, Tim. The Biden administration remains keenly focused on the Colonial Pipeline cyber attack and shutdown. Energy Secretary Jennifer Granholm provided an update this afternoon.
We've been working around the clock since Friday to help Colonial return the pipeline to normal operation as quickly and as safely and as securely as possible.
Granholm says a decision on restarting the pipeline expected late tomorrow. Top U.S. health officials returned to Capitol Hill today to update the Senate Health Committee on the pandemic and vaccination efforts.
Ranking Republican Richard Burr challenged President Biden's support for suspending patent protection on COVID-19 vaccines.
If we waive intellectual property in the United States, do we not stand the risk of affecting innovation in the future?
White House advisor David Kessler responded.
Extraordinary circumstances call for extraordinary measures. We want to make vaccines available to the world.
Senator Susan Collins said restrictions from the Centers for Disease Control on schools, summer camps, and wearing masks outdoors are more draconian than necessary. In Washington, Irv Chapman, Bloomberg Radio.
Medina Spirit will have a chance to win the second leg of the Triple Crown, this weekend's Preakness Stakes. Trainer Bob Baffert's attorney announced an agreement has been reached to allow the Kentucky Derby winner to race Saturday. The horse tested positive for a banned substance after finishing first at the Derby. Baffert has agreed to blood testing and monitoring and a medical record review by the Maryland Jockey Club. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So this story, we've all been talking about it here in the newsroom. It's, I think, among the most read stories on the Bloomberg. It has to do with Pret a Manger, which is a big restaurant chain over in Europe. We have a few here in New York,
we do. We have
too.
a few here.
And apparently, we are kind of tracking the sandwich sales at Pret a Manger, specifically when it comes to what's going on in London. Are Thomas Buckley and Jeremy Scott Diamond doing this story? London's bankers, corporate lawyers, and asset managers apparently taking their time returning to offices, even as the pandemic eases across the UK. I think there was data out of London, right, or out of the UK, that there were no deaths, COVID deaths today. But they're doing this based on sandwich sales.
Right. So it's shown in data from Pret a Manger. The restaurant chain typically sold about 200,000 lattes and 100,000 croissants a week to Britain's office workers, shoppers, and commuters before COVID struck. Pret is providing now weekly data to Bloomberg about its transactions volume across the country to provide one look at how the UK is getting back to normal.
Right. And in a geographical cluster that includes the City and Canary Wharf, London's two major financial districts, business remains relatively slow, although some employers are encouraging workers to return. Official UK government guidance is that those who can work from home should do so until June. But what's really fun, and I highly recommend you go to Bloomberg.com because it's kind of interactive and fun.
It's very, this is the way to read it, is online.
But it takes you throughout the UK and in and around London about what's going on in terms of sandwich sales.
So in London City, for example, the index is at 39 basis points, or 39% of pre-COVID base. It's down 7 points from last week. It goes on to other parts of the country. In London's airports, for example, are at just 19 basis points, or 19% of pre-COVID base. You can scroll through and see many different locations, and it actually moves across to different parts of the country when you get to that area.
Yeah, exactly. And I guess what's interesting, and this is an era where we've heard people talk about different metrics. Somebody tweeted at me, can we use Starbucks as the same thing? Like
it's a great
Starbucks
idea.
Sales, right? As our own kind of U.S. domestically run index. But anyway, check it out at Bloomberg.com. It is interactive. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have less than 13 minutes to go until the closing bell. The equity market remains at lower levels, but we are off the worst levels of the day. The Dow is down from a record high by 1.4%. Really, one of the key stories, the recovery that we have seen today in technology. The day began with the group as a whole moving lower, and shortly after the opening bell, the NASDAQ comp was down by more than 2%. Right now, the NASDAQ comp is only weaker by 0.1%. We're seeing the price of copper rally by 1.5% right now, and that has taken shares in Freeport-McMoRan higher by more than 5%. So if you look at the material names within the S&P 500, materials as a group, the only group that's positive on S&P 500 is down about 0.9% right now. We're seeing weakness in shares of Apple. Reuters reporting that Foxconn is cutting Apple iPhone 12 production in India by more than 50%. Workers there have been infected with the COVID virus, and they've had to leave the factory. Now, at the same time, we know that Apple's been seeing a surge in the average selling price for iPhones. Consumers apparently have been shifting to more expensive models. But today, an analyst over at Bernstein was saying this trend may not be repeated in the next year. In the bond market right now, long-term interest rates moving up just a bit. 10-year Treasury now at a yield of 1.61%. I'm Doug Krisner. That's your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, so just about 10 and a half minutes left in today's trading session. We've been bouncing around, no doubt about it, today. Definitely off our lows of the session, particularly with the NASDAQ, which, Tim, as you mentioned, actually squeezing out a little bit of a gain, was in the green just for a moment. Now just down about 0.1%, but nonetheless a volatile day. And who knows exactly why, because there's been a lot of reasons thrown out there.
Yeah, it's been a wild day. I mean, the NASDAQ was down more than 2%.
Yeah, pretty significant. All right, let's see what our next guest has to say. Barry James is back with us. He's president, CEO, and portfolio manager at James Investment Research, on the phone from Alpha, Ohio. Barry, nice to have you back here on Bloomberg. So how do you explain the day? I've seen inflation concerns initially for the sell-off. I've seen profit taking, which is something that we feel like is often a throwaway explanation. How do you see it?
Well, that's a great question, Carol. And, the answer is always that the sellers are more anxious than the buyers. But
True.
If we look at last week, the energy sector was up almost 9%. So that we would see some bit of a pullback, especially with all the hullabaloo about long lines and things of that nature, and the disruption within that whole sector. So I think that's probably what is sparking this. But underneath it, there are some warning signs that we've seen. Not that I think these are long term, but the warning signs are, number one, the insiders are selling, and the companies themselves are selling their shares actively. So those are two groups that tend to be right, and they're saying, we're going to take a
Wait, give us some examples of that. Like, who are you seeing selling right now?
Yeah.
Not necessarily insiders and/or companies.
Well, the list is really, really long. I've seen some where the new issuance is at just about record levels per se, and it's just all up and down throughout the stream of insiders selling. So I don't have a specific name to throw out there, but it's just I'm looking at the cumulative effect, and it's pretty telling. It's much higher than normal.
Well, and what's interesting though is we also at the same time we came off earnings and we saw some big buyback programs announced at the same time. We just saw Amazon do a huge debt offering of $18.5 billion, and some of the expectation is that they're going to use it to buy back shares. So it's interesting that that's happening at the same time. But are insiders selling because of tax reasons?
That's certainly part of it. I've had clients that have last year said, "Get me out all my gains. I don't want to go into this new year with any gains." So anyway, yes, that is part of it. But they've seen this huge run, especially in some of the names that weren't so popular for some time. Some of the smaller names, some of the more cyclical names, and the like. And so that would be normal to take some off the table. And the kind of growth we're seeing in the economy right now, obviously driving earnings and been driving stock prices, and it may be a little bit ahead of itself. We don't think it's a permanent thing, but we need a little bit of a cooling off period.
Hey Barry, are there any bearish economic indicators that you're seeing right now? I mean, anything that concerns you?
Yeah, the producer prices, and as you just mentioned, the commodity prices are way up. We have oil up. You've got the metals are way up. You've got agriculture way up. So all of these things are laying the groundwork to pressure on companies and their earnings. The CPI, hasn't been going up at the same pace as the PPI, and that makes it a lot tougher for companies to pass on their costs. So that is one piece of the puzzle that we're concerned about. We're also, as we look at the possibility of inflation kicking in and the lack of personnel, if you will. Hardee's locally, one worker, and that was the manager. One worker.
Isn't that just a matter of time before that kind of corrects itself? And whether it's, we were just talking about it earlier with Carl Riccadonna, whether some workers are staying home because of stimulus payments. He reminded us that only 60% of school districts have actually opened. So there are a lot of parents that are still struggling with, schooling their kids at home, and it's hard for them to get maybe back to work. I mean, there's a lot of factors at play right now, but ultimately that will correct itself.
I agree. The free market, if it doesn't get interfered with too much, will balance things out. It's not necessarily pretty, but yes, it'll get there, and people will probably be making more money.
Well, well, let's talk about that, because there are some names that you do like at this point, and let's talk about them. Mastech is one. MTZ is the ticker. It's been on quite a run, up about 72% here on infrastructure play, communications, utility infrastructure. They work on wind and solar farms. It also, I think, hit a record in yesterday's trade. I have to check today if it hit another record. You like this one. You would commit new money to it.
Yeah. I mean, you can only sell the top once, right? So, anyways, forgive that joke. It's in the field that is going to be dominant for quite some time, and they are really, really good at what they do. Their sales growth against the competitors, cash flow margin, all those sorts of things versus competitors are very, very strong. So they've got the financial side of it in good shape. They have low leverage on a historical basis, and they're right in the sweet spot, even with 5G. So I've got no problem buying it at a new high.
Okay, what about LGI Homes? Market cap of over $4 billion, and it targets first-time home buyers in Texas, Arizona, Florida, and Georgia.
Right. This is small. Don't want to give anybody the impression this is one of the big guys, but the low interest rates is a major tailwind. Homes in that starter area, you can't find them. There's no inventory, and people are wanting to get out on their own. I think this whole COVID thing has got people thinking, I want my own place, and I don't want to be in an apartment or anything. So that is, I think, very supportive of what they do. They've got great margins, and what's important with the prices of the commodities going up, they seem to have the ability to pass on those costs fairly easily. So they shouldn't get caught in a trap of paying up to get the goods without being able to pass that along.
And again, this is one that's been on quite a tear. I think it's up something like almost 63% so far this year. You don't have a problem. You think this one can move even higher?
Well, yeah, but if we do get this little pause that refreshes, these types of companies will pause, the Mastechs, the LGIs. We have these in our Balanced Golden Rainbow Fund, and if we see a pullback, we'd probably be buying buying more in those particular positions.
Well, LG iHomes is down about 5%. So would you be buying into it today, potentially?
Yeah. You know, it's the case where you have to step up whenever the opportunity arises. You can't just you know, wish and hope that, you know, buying on any given day. Got to move when the opportunity strikes.
All right, we're going to leave it on that note. Barry, thank you so much. Barry James, President, CEO, and Portfolio Manager, James Investment Research, on the phone from Alpha, Ohio. All right, folks. Coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and on YouTube, counting you down to the closing bell on this Tuesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, and Taylor Riggs counting you down to the closing bell in no particular order. Here to help us take us beyond the bell, our global simulcast partners, Carol Masser and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse what happened today. And Carol, what happened today is we started off when we had a huge sell-off right at the open here, down about 2% pretty much across the board on the indices. They've kind of fought their way back here.
Yeah, absolutely. And that happened pretty quickly, if you remember, Romaine, right at the open. We had that drop and then we bounced back. And check out NASDAQ stocks in particular. I mean, Tim, we actually saw some gains for at least just a moment today.
Yeah, it was wild because the story this morning was that tech was under pressure. The NASDAQ composite down more than 2%. But at one point early this afternoon, it actually reached into positive territory. And guys, I got to tell you, right before the close, just a couple of minutes, we are getting pretty close to the NASDAQ actually finishing flat. An absolutely wild day, especially for tech stocks.
Yeah, it really has been. That narrative shift, is it less a fear of inflation, more, well, some profit taking? But I tell you what actually is starting to pay dividends is if you're shorting. Finally, if you've been short this market, you are starting to be paid off if you are bear. That basket of 50 most shorted stocks slipping now for 10 of the last 11 sessions. So best day to be a bear since December 2018, Taylor.
You might want to short those bonds. Yields are climbing for 4 straight days. I leave for a day, Romaine, and yields climbed yesterday, and they climb an additional 2 basis points today as well.
Welcome back, by the way, Taylor. You missed a lot when you're gone here. We should point out, 2069, that was the read on the New York Stock Exchange tick index at the start of trading today, right around 9:30. That was a record low. That's when you're basically measuring the down ticks and minus the upticks there. That was the bearishness that we saw coming into this market. You had a NASDAQ 100 that opened at 13,102. You had an S&P 500 that opened at 4150, got down to 4111. It's going to close here right now at 4152 and change. The NASDAQ 13,389. That's relatively flat on the day. Dow Jones Industrial Average taking it the hardest here, down about 1.4% at 34,270, Carol.
I love, Romaine, that you mentioned the tick index because, I mean, it can be volatile, it can move around, but if you're a chart watcher, you might have said, okay, maybe this is an indication that we bottomed out, and maybe that helps explain why we bounced up big time. But if you look at the major industry groups in the S&P 500, Taylor, most of them were down today.
Yeah, and for our radio audience, really unbelievable on days like today's when I try to highlight the winners and the losers. And unfortunately, the winners are all still in the red, except for one, materials index. That's up 0.2%. But in the red, but still outperforming, it's software and services like cybersecurity companies, for example, right? ServiceNow, media companies, Carol, those are in the red, even though they were the big outperformers, as like Activision Blizzard, as we await earnings from Electronic Arts. And then finally on the red, it pretty much sums up the story for our radio audience. You're off 2.5% for financials, insurance, energy companies, as we're still trying to figure out the ripple effects of that Colonial Pipeline hack.
All right. Electronic Arts is crossing the Bloomberg, and maybe we could just do a quick check on that because we were certainly one of the earnings that we were anticipating here. So, whoops, let me just bring it up here. Electronic Arts fourth quarter revenue, $1.35 billion, just crossing here. And let me just pull up the rest of the numbers. Sorry, my Bloomberg just went away here. So let's just go through them. First quarter adjusted revenue of $1.25 billion versus an estimate of $1.14 billion. And first quarter adjusted EPS of 55 cents versus 65 cents. That is the outlook. Fourth quarter, though, Caroline, we're looking at a beat, certainly on the top line there, $1.49 billion, and on the bottom line, fourth quarter adjusted EPS of $1.23. That too was a beat. The estimate was for $1.06.
Notable that we're getting some really forward-looking guidance from a company. A few have shied away from doing such, but seeing the 2022 adjusted revenue at 7.3 billion. So big beat overall in terms of that, but notable that we'll have to see how it continues to trade after hours. Of course, gaming stocks have been significantly hit by concerns about chip and supply chain issues overall. Electronic arts basically down 4% over the last 3 months, Carol.
Yeah, definitely see some pressure here in the after hours too, down about 1.7%. All right, let's go through some of the gainers here. Norton LifeLock, this was your #1 gainer in the S&P 500 today. Had quite a run, up about 9% at its highs today. This as a result, the stock EPS beat for its latest earnings. Also gave forecasts that analysts saw as strong. So this was the biggest move up in about 3 months. Callaway Golf, also a big gainer in today's session. That stock up more than 13% in today's trade. It's had quite a run this year, up about 40%. But again, we see a big EPS and sales report above estimates, and so that certainly gave some momentum. I want to mention Amazon, because if you looked at some of the big tech names today, they were under pressure certainly at the start of the day. Amazon, though, by the end, you can see just up about 1%, and we saw that playing out in a lot of the big tech names. And Activision, I wanted to mention because of Electronic Arts. Here's another maker of video games. That stock, we saw it being upgraded by BMO. Price target raised to about 116 from 104, Tim.
Yeah, Carol, you got the gainers, I got the decliners. Starting with the RealReal, the luxury consignment store, down more than 19% today. Shares slid yesterday after the company reported that the CFO would leave, but then BTI downgraded the shares, which didn't help at all. Tesla down nearly 2%. Lower today, as we learned that Tesla sold 27% fewer locally made cars in April than in March. There was also a Reuters report about Tesla doing less in China than previously thought as a result of those tariffs. That didn't help at all. Here's an interesting one. Virgin Galactic Holdings, the parent company, of course, of Virgin Galactic, Richard Branson's company, down as much as 21% earlier in the day today, but eked out something positive at the end of the day today. It was just a wild move from this company. It was lower after the space tourism startup said it encountered another technical problem, Caroline, that could delay a test flight. And then Novavax down for a second day in a row. This yesterday, after falling 8.8% yesterday, down more than 14% over a delayed COVID vaccine, Caroline.
Well, as Virgin Galactic ekes out a growth, Tim, so too does the Bloomberg Dollar Spot Index. They've been lower on the day, but as we said, this risk sort of cautious tone come back into the market. We saw the dollar actually manage to rise up as stocks pushed lower. Overall, on the FX market, for our radio, for our YouTube, for our TV audiences, we're looking at a mixed picture in terms of the foreign currencies. They mean the yen up about 1/10%, but the Swiss franc, the other haven of choice, usually down by 0.3%. So not really a clear narrative, but we probably did see actually some of the moves go into commodity-related stocks as commodities were actually on a tear. Maybe this again fueling that inflation pressure that we've seen. Gas oil up by 1.4%, nat gas too. WTI crude putting in a positive, up 0.8%. But steel rising. Copper once again well above 10,000 when you're seeing it traded on the London markets. Brent crude up by 0.6%. And the bond market, though, a clear sea of red when you're looking globally, Taylor. We're seeing yields move higher, whether at the German, the Swiss, the Belgian. That echoing the fact that we saw Europe really take hold of this inflation narrative. European stocks sold off hard, and bond markets also did, in anticipation of maybe a Fed hike coming sooner than we anticipated.
Well, you kicked it off great. It's a global story, but it really is a U.S. story as well, with yields rising 4 straight days on the 10-year, 3 straight days on the 30-year of price lower, yield higher. What that means is we kicked off a 3-year auction today that was really solid, and this really, Carol, fits nicely with where I want to go. We have a 10-year auction tomorrow. Those auctions have been a key focus, but all the notes that I have been reading say the 10-year auction, yeah, okay, CPI, retail sales, all of those, we need to get through those data points in order to get some more real direction here as we think about inflationary forces, as we take a look at the health of the consumer, i.e. retail sales.
Yeah, well, listen, we're going to get a better read on inflation later on this week. We're going to get consumer prices. We're also going to get producer prices. And so, I mean, I feel like, you guys, the debate continues. And you do wonder what changes from day to day. I mean, we had 2 Fed speakers, one former Fed, Bill Dudley, and then you had Lyle Brainard, you know, and one saying, don't worry, the Fed has plenty of time. And then you have Bill Dudley, Tim, saying, well, wait a minute, maybe the Fed's going to be too late. And then they're going to have to really move aggressively when it comes to rates.
Yeah, and the thing that's so interesting, Carol, is we talk to experts each and every day right here on Bloomberg Radio and Bloomberg TV, and what I keep hearing over and over again from the analysts we speak to is that word transitory every single time, and it's something that we hear from the Fed, and the concerns that they have about inflation, well, it's just that. It's temporary. It's transitory, Romaine.
Well, yeah, I mean, but this was the whole debate. You come in this morning, you had the big Wall Street Journal column by Druckenmiller basically making the case here that, at least in his mind, is not necessarily transitory. You have this idea here that maybe the Fed is throwing a few too many logs on the fire. I mean, it wasn't just Lael Brenner pushing back on this, but we heard from Raphael Bostic as well as Harker. Harker, though, seemed like he was at least willing to sort of entertain the idea that this might be more than transitory. But this is basically why you're going to see whatever, I'm not sure what this is on the board, but this is basically what's going to end up happening when you talk about how you value these stocks.
Yeah.
That's a lot of stuff on the board.
I mean,
Can our radio
apparently,
audience see that?
a monkey could make money in this market. That's what Stan Druckenmiller was saying,
Give me a
Annie.
monkey.
I mean, are
Where
we
did you
all
get
monkeys? Because not everyone's making money in this market, I'm sure. But he was even calling like the end to the dollar in some way.
Caroline, the monkeys are
than the stock
calling saying they have
itself.
problems with you making that reference. I'm just going to say.
Brady Bunch, raise your hand if you drink oat milk, because I hear Oatly is IPOing. Our producer drinks almond milk. She gets screamed at. It's so bad for the environment. I can't believe she does that. So oat milk's the only alternative.
Romaine,
You're from California. You do this.
Exactly, I am. Yeah, but you're right about the environmental impact. Look, there was an article in the New York Times over the weekend that talked about all the different types of milk that are out there, milk alternatives, whether it's pea protein milk, almond milk, coconut milk. You got to look at the sugar, guys, because some of these milks have a lot of sugar added to them.
Raining on our
not
Oatly
all
parade.
They're not all healthier
I
than the
heard
original
the
milk.
phrase pea protein milk. Is that a thing?
It apparently, I actually haven't tried it, but yeah, it does.
Sounds
Pea protein is so
disgusting.
hot right now.
Nut juice.
Let us know.
Wait,
let
what
us know
does
how that
Romaine
goes.
drink?
Silence.
He's not going to
He's
answer.
just laughing. He can't.
All right. We're going to leave it on that note. All right, that's going to do it for our cross-platform coverage here on Bloomberg Radio, Bloomberg TV, and YouTube. We'll see you tomorrow, same place, same time.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Milk. I'm just going to say. I need a
I'll
little
go get
energy.
you one, Carol.
You promise?
Yeah.
Promise. Listen, I came up with some statistics in a Bloomberg, well, not me, but Grandview Research saying plant-based beverage market, $23 billion by 2027.
That's why you see Oatly going public.
Exactly. Oprah backs it. So does Jay-Z. So does a lot of other people. All right, you have a good evening.
Thank you. You too. I'll see you tomorrow.
All right, let's get a check on world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, 5 hours in line. That's what many drivers in the South are starting to encounter at the gas pump as the Colonial Pipeline shutdown continues. Bloomberg's Nathan Hager reports from Washington.
The Environmental Protection Agency has waived some volatility protections for gas sales in Washington, D.C. and 3 states for 1 week to deal with the supply crunch. Bloomberg U.S. Energy editor Joe Carroll says it's a tough call.
I don't envy the folks who have to make that call. It's a question of, are you going to let in, in layman's terms, slightly dirtier gasoline and diesel, especially diesel, into high pollution areas so that your economy doesn't shut down.
One D.C. area gasoline distributor is warning catastrophic shortages could be on the way. In Washington, I'm Nathan Hager, Bloomberg Radio.
President Biden is making a big push to get more Americans vaccinated by July 4th. Speaking today with a bipartisan group of governors, Biden said his administration is working hard to make it easier. That includes free rides to and from vaccination sites and pop-up clinics.
From May 24th through July 4th, Uber and Lyft are both going to offer everyone free rides to and from vaccination sites.
Biden says states are also being offered FEMA funds for pop-up vaccination sites in workplaces and churches. A judge says the National Rifle Association cannot use bankruptcy to reincorporate to gun-friendly Texas from New York, where it faces a government fraud lawsuit. The judge dismissed the NRA's Chapter 11 case after a trial in which New York officials claim the filing was an effort to dodge oversight. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Joining me right now is Bloomberg Daybreak Asia anchor Doug Krisner. And gas, everybody keeps talking about the potential for, we know prices are up a little bit. We know there's some stations in Florida and elsewhere that they've run out of gas. We're watching, though, in New York.
Yeah, this is kind of curious because when the closure of the Colonial Pipeline first occurred following that ransomware attack, we were talking to a lot of industry analysts, and they were reminding us that there's a big build in inventories, not only of gasoline, but of jet fuel as well. And so what they were telling us earlier in the week is, look, even if the pipeline remains closed this week, it's not going to have a meaningful impact on gasoline supply. But we're getting anecdotal evidence, as you just pointed out, Carol, that particular states around the D.C. area and Washington, D.C. itself with catastrophic shortages of gasoline.
Yeah, exactly. White House saying it's where are the shortages in the southeast of the country, trying to alleviate the problem. But, you know, it's interesting, Doug, on a day where we look at the markets and what happened, and there's talks about inflation concerns again, and I think people, I mean, energy on the equity side has been on a tear. We know that. We're watching gas prices, but you do wonder whether, to borrow a term from the U.S. Federal Reserve, you know, is it just transitory until Colonial can figure it out? And so is this a 1 week, 2 week problem, and how problematic is it ultimately?
You know, that's a tough question, Carol, but I'll say it this way, because we've been seeing the migration away from using fossil fuels to drive energy production, right? Think of the green energy movement. Look at copper prices today. Copper set a record high, and I'm looking at shares in Freeport-McMoRan moving up about 5%, not quite 5%. If you look at the copper story, it very much correlates to the build-out of kind of sustainable energy, whether it's EV, whether it's, you know, turbos that are being used, wind farms and things like that. So the demand from copper maybe, or for copper, is the more important indicator to look at in terms of inflationary pressures rather than the oil story.
Yeah, I think you have hit on something, and it's definitely something that we'll continue to watch. Doug Krisner, thank you so much. This is Bloomberg. And don't miss out on today, coming your way at 5 p.m. Wall Street time on Bloomberg. The team talking with Pennsylvania Congressman Mike Doyle. That is Sound On today at 5 on Bloomberg Radio. It is 4:15 on Wall Street. That means it's time for drive time. Traffic happens every 15 minutes right here on Bloomberg Radio. All right, Ed Kalegi, Best Hudson River crossing out to New Jersey. What do you see?
Right now, Carol, there are two, the Lincoln Tunnel, the Holland Tunnel, both at 20 minutes right now. So take your choice. If you're trying to get up to the George Washington Bridge, that will be difficult because the west side is very heavy right now. That is the slower side. And the brake lights begin to illuminate as early as the mid-50s. They stay brightly lit all the way up to the bridge. The FDR, heavy pockets of volume, 30s up towards the 90s, heavy up the Harlem River Drive. So the Lincoln and the Holland at 20 apiece, not bad choices. Eastbound the BQE at Flushing Avenue, watch for an accident. The left lane is blocked. That is a 15-minute delay back from the area of Atlantic Avenue. Looks like the ride, if you're traveling on the Cross Bronx into the bridge, that's still an hour back from the Bruckner Interchange. The Bloomberg 11:30 3-day weather. Tonight clear, low 40 to 45. Wednesday, sunshine, high 60 to 65. Thursday, partly sunny, high 65 to 70. Friday, partly sunny, high 65 to 70. Right now in Central Park, it is partly cloudy. We're at 64 degrees. And this report, it is sponsored by Audible. Unlimited audio streaming is yours with Audible Plus. Enjoy thousands of select Audible originals, audiobooks, podcasts, and more. Sign up for a free Audible Plus trial at audible.com. 64 degrees, partly cloudy with the best ride. In and out of the city, I'm Ed Kalegi, Bloomberg 1130. Bloomberg Business Week continues.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters in New York, I'm Doug Krisner, 17 past the hour. We had weakness in equities today with the NASDAQ composite dropping just 0.1%, but the final number doesn't really tell the whole story. By and large, tech was on the back foot through the entire session. At one point today, the NASDAQ comp was down 2.2%. Dow Industrial Average falling from a record high by nearly 1.4% today. You can blame the weakness in energy stocks. And weaker energy shares also pulling the S&P 500 down about 0.9%. In the bond market, meantime, a 10-year Treasury last quoted in New York at a yield of 1.61%. I'm looking at shares of EA, Electronic Arts, in the after-hours session. The stock right now is down about 0.9% after the company reported adjusted revenue for the latest quarter, right in line with estimates. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, got it, Doug. Thank you so much. So shares of L Brands, they have been on a tear, nearly doubling since last November. And today the company, which had been mulling either a split or sale for its Victoria's Secret chain, they opted to spin it off. So let's get the details from Bloomberg News retail reporter Jordan Holman. She is with us on the phone in Atlanta. And I wanted to just, Jordan, quick look at the share price in today's session, down about 1.8% here. So tell us what happened. We knew they were going to do something, but this wasn't necessarily what we expected.
That's correct. So L Brands has definitely been mulling what to do with its Victoria's Secret chain, either sell it or spin it off. And today, the company announced that they are going to spin it off and make it its own publicly traded company, as well as Bath & Body Works will, be its own freestanding company. And the reason for this is Victoria's Secret has seen a strong turnaround since the pandemic. And they just decided that they would rather keep it going comparing to selling it to someone else.
Which is wild, because they did shop it around, it sounds like, right?
Yeah, so L Brands said that they had multiple, interested parties. But when I was talking to analysts after this deal was announced, one interesting part about it is that the valuation for Victoria's Secret has gone up in some estimates, 5-fold since the pandemic started. Because I'm sure many people will remember that there was a deal in February 2020, right before the pandemic, that valued the company about $1 billion. Today, that valuation is around $5 billion, some analysts say.
That's a big difference. So what happened? Because I also think it's safe to say that most said after kind of Me Too and rethinking kind of the image that they put out as part of the brand, that it was kind of out of date, to put it kindly. So what happened? Because going from 1 billion valuation to 5 billion, that's a big difference.
Absolutely. So for Victoria's Secret, they really did focus on growing their top line growth and, focusing less on discounting. And then also they had been trying to change their marketing strategy before the pandemic by focusing on making sure that the merchandise is what women actually wanted. Because a lot of their competitors, you think about Savage Fenty or Third Love, they really focus on comfortability and not just, aesthetic looks. And so while we haven't seen that full turnaround in terms of marketing strategy from Victoria's Secret, there's something that's definitely resonating with consumers during the pandemic. And it is a great feat because apparel really did collapse at the beginning of the pandemic. No one was buying anything new. But Victoria's Secret has said they've seen a surge in shoppers.
So why are investors, do you think, disappointed here? And this was an interesting market day, to be fair, where we saw pressure. But the stock was down from the get-go today.
It was, despite the valuation. I think there's been a lot of back and forth with what is going to be done with Victoria's Secret, and there needs to be better understanding of what will it mean to have it be its own company. Because I think fundamentally people are still looking at what will change with the organization to continue to attract the shoppers that it needs. You mentioned Me Too and the fact that women do want something different from their merchandise and from lingerie and those type of things. And we just haven't seen that take root yet fully at Victoria's Secret.
Yeah, kind of. It's interesting. Is it possible that Victoria's Secret, now that it's on its own, would it be potentially a target for another company to do a bolt-on?
I mean, that's always a possibility, but just the fact that its valuation is so high, and that they had interest from other buyers. Analysts were telling me probably just a lot of people just aren't willing to pay $5 billion.
Right.
And in the same way, Victoria's Secret can take the strong brand, it still has so much brand equity and recognition, and handle the problems by themselves.
So what does this do for L Brands now? They can focus on their brand. Tell me what it means for them as a company now that they can kind of get Victoria's, or they will get Victoria's Secret off their balance sheet, but also off their minds. It won't be their responsibility.
Yep. So it means that they can focus on Bath & Body Works, which has been a bright spot for years for the company. And Bath & Body Works sells exactly what people needed during the pandemic, soaps and then lotions, because we're washing our hands so much. And so that chain is still on a tear. And so the current CEO of L Brands will oversee that brand. So they just also have different management teams. It allows them to focus squarely on what their product lines are, and that will be a change that investors can look forward to.
Yeah, really fascinating. Hey, just got about 45, 50 seconds left here. You cover retail. How's the industry doing? And I know that's a broad statement, and there's a lot of moving parts, but coming back?
Yeah, definitely coming back. So many retailers have nodded at the fact that stimulus checks have helped boost sales, and we'll just see just how much next week, because we have a large slate of earnings, first quarter earnings next week for places like Macy's and Kohl's and Home Depot.
What are you anticipating, or what are analysts anticipating?
They're anticipating that it will be a growth, because if you think about this time last year, so many stores were still closed. So the comps for apparel chains will be much stronger than it was for the stores that were opening. But yeah, you have the stimulus checks, and then also with the vaccination campaigns, lots of expectations for vacation, and people will want to reset their wardrobes. So places like a Macy's or Kohl's will benefit from that.
Yeah, Macy's is up 53% so far this year. If I look at Nordstrom, up almost 22%. So you definitely have seen the economy reopening trade playing out in those names. Jordan Holman, thank you so much. Retail reporter at Bloomberg News, on the phone from Atlanta, talking about L Brands spinning off Victoria's Secret after really a turnaround at that company and profit rebounding as well. You're listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So I'm going to read you a line from a book. Here it is. But this book isn't just about heartbreak and tragedy. It's also about recovery. We've got the author of a book about the video game industry. He's our own Jason Schreier. His book out, Press Reset, Ruin and Recovery in the Video Game Industry. He gets into the lives, the people who are involved in the industry and the heartbreak that sometimes goes along with it. So we'll get into it with him in just a moment. First up, though, let's get back to Doug Krisner, some of the news after the close.
Yeah, let's begin, hey, Carol, with Electronic Arts. Looking at the stock down in late trading after the company's profit forecast, it kind of missed the estimate. It could be taken as a sign the post-pandemic slowdown is now taking a toll on the video game industry. EA in the late session, well off the worst point of the trading. We're down about 0.6%. We had weakness in the overall U.S. equity market today. Energy shares pulling the Dow down from a record by 1.4%. But I think the story is this impressive recovery in the information technology space. The day began with a big decline in the NASDAQ composite. At one point, we were down 2.2%. A lot of concern here about the extent to which inflationary pressures may hamper the outlook for some of those big tech companies. But at the end of the day, the NASDAQ comp was only off 0.1%. S&P 500 dropping 0.9% on the day. And the bond market 10-year Treasury last quoted in New York at a yield of 1.62%. As long as we're talking about inflation, you should know that copper set a record high today at the close, 480.50, and that helped to lift shares of Freeport-McMoRan. They were up about 4.8% in the regular session. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, really appreciate it. Got to tell you, you love a book when some of the chapters are big, huge problems, workaholics, also the case of the missing studio, and bloody socks. So let's get into it because these are all in a new book. It's called Press Reset, Ruin and Recovery in the Video Game Industry. And you might remember, I think it was over this summer, Bloomberg Business Week featured a cover story that was all about the video game industry, the dark underbelly of a business built on fun. And that was also reported by our own Bloomberg News technology writer, Jason Schreier. He, too, is author of this new book, Press Reset. He's also author of the best-selling book, Blood, Sweat, and Pixels, and he joins us on the phone. Good to have you here. You're up in Westchester. So tell us about this book, because this is a little bit different from your first book.
Hi, Carol. Thanks so much for having me.
Yeah,
yes,
you bet.
This is a little bit different. So with my first book, I kind of broke down the question of why are games so hard to make? And I kind of answered that through a bunch of case studies, exploring different games and telling their stories. With this book, I wanted to tell more of a human story, tell the story of people in the video game industry and the hardships that they sometimes go through and what that means for them, what it does to them, what kind of, how it feels, how they recover afterwards. And through that, I explored the question of why is this games industry, which is making so much money, it made $180 billion last year, why is it so unstable for its workers? Why do they have such a hard time keeping their jobs in this industry?
You're right. It's about heartbreak and tragedy. It's also about recovery. I mean, there are several instances in the book where you talk about, people who have worked together, as you say, pulled all-nighters, working on games, hitting deadlines and so on and so forth, only to come in and just find out that they don't have a job and they're not going to see these people anymore.
Yeah, and it's not only that their games failed or that the company is in business trouble. Sometimes it's a successful game, as in the case of Irrational Games, which is one of the companies that I cover in the book. They made a game called Bioshock, which is very popular, critically acclaimed. About a year after their most recent game, Bioshock Infinite, everybody came in to find that the studio was shutting down. And yeah, it can be really brutal. One of the worst parts, I think, and I talk about this quite a bit in Press Reset, is that you are kind of stuck wherever you are, and you might have to move thousands of miles away to get a new job. In Irrational's case, they were in Boston, and there are not a lot of other video game companies in Boston. So a lot of the people who wanted to stay and keep working in games had to move across the country, uproot their whole families, and it can be really just burn people out. It feels unsustainable to me.
I feel like it's a company that goes bankrupt, right? And then all of a sudden everybody's in there, the vultures, like, I want the desks, I want this. But I mean, you talk about when a company goes down, one of these video game company goes down, then all of a sudden recruiters fly in, right, to kind of take the workers. So they are in demand, but as you said, they often have to be uprooted and move their families maybe across the country.
Yeah, it's funny. I saw a stat just the other day that was essentially, it was a list of job postings for the video game industry. And there were like a couple hundred jobs here and there for junior level people. And then it was like thousands of senior level application job listings for senior level positions. And the reason that is because the games industry has this dearth of people who have 5-10 years of experience because so many of them burn out. So yes, these recruiters are seizing in and hoping to get some of that talent, some of that experience. But a lot of those people might not want to move. I mean, in Irrational's case, a lot of the people who were in Boston, maybe if they're in their 20s, they can move across the country and get new jobs. They're kind of free. But if they're in their 30s, they have families. They don't want to pull their kids out of school. So a lot of them just left the industry entirely, went to other tech companies in the area, finance companies, banks, stuff like that. And that we are seeing way too much in this industry.
Well, we all got a tease of your book thanks to Business Week magazine, where there was an excerpt in there, and that's where the Bloody Sox chapter, which is specifically about Curt Schilling of the Red Sox. Just give us a little tease, and folks can go to Bloomberg.com or on the Bloomberg or buy your book to read the whole story, because I feel like that chapter alone could be a Netflix series or a movie, because it's just fascinating. Very successful baseball player, but it didn't turn out so well when it comes to video games, ultimately.
Yeah, man, thank you for the kind words. And yeah, so Curt Schilling, formerly of the Red Sox, these days best known as kind of a provocateur, right-wing provocateur. But yeah, he career that he was going to start this game studio, and he very much came from the baseball life, was very much like, I'm going to treat all my employees like all-stars. I'm going to buy them the best of the best, get them all these perks and the best health benefits, which on the face of things is pretty great, but he wound up running the company completely out of money. They wound up taking a giant loan that was guaranteed by the state of Rhode Island for $75 million in exchange for moving to Rhode Island and getting a bunch of jobs there in Providence. And wound up burning through that in a year. Suddenly, one day, everybody gets into work. They think they have it made in the shade. They're here at this company where they are treated like the best of the best. They get into work one day and they are not paid. Their paychecks have not processed because it turns out the company ran completely out of money. None of them got severance. None of them got those final paychecks. They were all robbed, essentially, of weeks of work, and all were stuck in Rhode Island where there are no other game companies. It's a similar story.
Oh, my God. Listen, sit tight for a second. We're going to do a little bit of news, and we'll come back and talk a little bit more about the book. We are talking with Bloomberg News technology writer Jason Schreier. He is out with a new book. It's called Press Reset, Ruin and Recovery in the Video Game Industry. As I mentioned, just a few weeks ago, we talked about it, an excerpt in Business Week magazine. He's also a best-selling author of Blood, Sweat, and Pixels. We'll continue our conversation in just a moment. In the meantime, let's get an update on world and national news. For that, over to Nancy Lyons in D.C. Hi, Nance.
Hey, Carol. The Colonial Pipeline could be turned back on by tomorrow evening. The line, which supplies almost half the East Coast gas and jet fuel supply, has been shut down since Friday due to a ransomware attack on the company's network. Energy Secretary Jennifer Granholm says when the pipeline is back in operation, it'll take some time for it to return to normal.
There is fuel in the pipe, and then there is fuel, the offtake from the refineries that have to be added. So it will take a few days to be up and running.
Granholm says the administration will have no tolerance for price gouging. Virginia has declared a state of emergency, which will give the state and local governments there flexibility to ensure
Will New York's fitness scene stay home? I'm Tara LaChapelle.
Lower grade fuels.
Will New York's fitness scene stay home? I'm Tara LaChapelle, a columnist for Bloomberg Opinion. Before the pandemic, fitness studios were booming in New York City. At the end of the workday, young professionals could be seen scurrying out of office buildings with yoga mats or gym bags slung over their shoulders. And many booked their workouts using a ClassPass subscription. ClassPass had just joined the Unicorn Startup Club, and it created a way of life until COVID-19 shut everything down. Many gyms went bankrupt and closed permanently. Now that the city is reopening, it's unclear what becomes of gyms. ClassPass has reportedly held merger talks with MindBody, a private equity-backed competitor, and Peloton, the very symbol of quarantine fitness, just recalled its treadmills after safety issues that resulted in the death of a child. Still, the recall probably won't put an end to the home workout trend. Whether people go back to lugging their gym bags around the city may depend on how many are called back into the office and whether they've already shelled out $2,000 for a spin bike. I'm Tara LaChapelle. For more opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
Bloomberg Business Week. Carol Masser in our Interactive Broker studio. Joining me once again, Doug Krisner at Bloomberg Daybreak Asia, coming your way in just about an hour and 20 minutes. Kathy Wood, we often have stories, Doug, on the terminal, and I was just looking up at her ARC Innovation Fund, which is her flagship fund, and gaining about 2% in today's session, but it is down about 32% from its high back in early mid-February.
Yeah, I mean, and last year, I think it was 150% return on that fund.
Yes.
You got to take a look at what's happening in big tech. I know this fund is very concentrated in names like Tesla, for example. I mean, and she's been very, very spot on with a lot of the recovery trade, not just in terms of, kind of the cyclical stocks, but really getting out in front of where technology may be taking us. And since the beginning of the year, as all of the measures from both the Fed and the fiscal authorities have kind of manifest, and we are seeing really clear evidence of a recovery in the economy, there's been the pivot, right, away from some of the high valuation names and into value. And certainly when you look at the ARC Innovation Fund, it's kind of a poster child for that trade. And so not surprisingly, it's going to reflect a little bit of weakness.
Right. We've seen investors pulling more than $500 million from the main fund in May so far. But you're right. Tesla's the number one holding, almost 11%. Teladoc Health, over 6%. Roku, Square, these are all, Shopify, Zoom, which was such a pandemic play. Doug, as we know, right now we're all talking about Zoom. We weren't roughly a year ago. But again, there's been the market just redirecting itself as the economy reopens, and we're seeing that that certainly work out in the trade.
Yeah, and then when you're talking about rising inflation and you look at some of the valuations here, particularly for companies that are looking far out into the future in terms of trying to model their revenue, anytime there's inflationary concerns, that's going to be a negative, right? And I think some of what we're seeing play out in the tech space, certainly with a name like Tesla, is reflective of that fact.
Yeah, absolutely. Well, we'll certainly be keeping an eye on it and tracking the trend.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It was a down day for the equity market today. If you look at the 11 industry groups within the S&P 500, only one group actually gained. Material shares were higher, and that's principally a story of Freeport-McMoRan, which picked up about 4.8% today. Copper closing at a record high, 480.50. If you're looking for an indicator of inflation, that was one of the trouble spots for the equity market today. Fears of rising inflationary pressures and inflationary expectations, that would certainly cloud the outlook for a lot of the technology space, since the group's earnings prospects looks far into the future. One of the reasons that the NASDAQ composite was down more than 2% right out of the gate today. Interestingly, through the day, we saw a recovery in big cap tech, and at the end of the day, the NASDAQ comp was only off 0.1%. That said, the Dow dropped from a record by 1.4%, and the S&P 500 weaker today by 0.9%. In both cases, it was weakness in energy that led the market lower. After the bell, we heard from Electronic Arts. The stock right now is weaker by about 0.6%. The company's profit forecast missed quarterly estimates. It could be a sign, at least in the view of some analysts, that the post-pandemic slowdown is now taking a toll on video games. 10-year Treasury last quoted in New York at a yield of 1.62%. I'm Doug Krisner. That's your Bloomberg Business Flash.
We're talking about video games. Nicely done. Doug Krisner, thank you so much. Let's get back to Jason Schreier, technology reporter here at Bloomberg News. His new book out, Press Reset, Ruin and Recovery in the Video Game Industry. And you might recall there was an excerpt in Business Week magazine just recently. So Jason's still with us on the phone in Westchester. So Jason, Chapter 9, Human Costs, Human Solutions. And you write, ask any veteran video game developer their least favorite thing about the industry, and you'll probably get a different version of the same answer. It treats people poorly, it chews them up, and then spits them back out, leaving nothing but gristle and bones behind. So why do they do it? Because people go back, right? Or do they go back to the industry? I mean, they do, right? They like it.
Well, it's very much a young person's industry, and there's a great quote in the book from a guy named Zach Mumbach, who spent a long time at EA, and at one point later in his career, he said, I was looking around in the office, and when I had started in 2000, I was in my 20s and everyone else was in their 20s. Now I'm looking around in my 30s and everyone else is in their 20s. And I'm like, where is everyone who came up with me? And the answer is that the video game industry, while it's certainly fun, I mean, it's fun to work on games and it can be really interesting and challenging and creatively satisfying. All these terrible factors, including the volatility that I cover in Press Reset, just lead to a whole lot of burnout. And I'm not sure how many of those people are going back. I think a lot of people just feel like games does not treat them. The games industry does not treat them right.
Is there any model that just seems to work above and beyond other models? Or is this just, like what are the companies that maybe have done it right?
Yeah, well, there are a couple of things, and I explore in the chapter you mentioned, I explore some of the potential answers to these questions and solutions to these problems that I bring up here. One is, the big one is unionization, which has not happened in the North American video game industry at all. When you look at the video games kind of sister industry in Hollywood, and one of the reasons that people are able to maintain careers in that field is because they're unionized, and so they have protections in place, and they might bounce around from gig to gig, but they know they'll get paid for every overtime hour, and they know they're going to get a certain minimum salary, and they know they're going to get benefits and health care. So that's a big thing, and I think that could offer some protections and give workers a seat at the table in the video game industry to a level that they haven't seen before. The other thing, and this is, it's wild timing, you were talking about Zoom before and how a year ago we had no idea what it is. I actually think that remote work is one of the big solutions to the video game industry's woes. And I say that because, like I mentioned earlier, the worst part about being caught in a layoff or a studio shutdown is knowing that you might have to move thousands of miles away. You might have to uproot your family. That's ultimately what drives a lot of people out of gaming. And a solution to that might be if, hey, okay, I just got laid off, but I can just log into my computer in my home office and potentially get a job anywhere without having to move. That, I think, would keep a lot of people who left the industry from burning out because they wouldn't have to worry about moving to a new city every time they had to switch jobs. So could be a game changer.
Give me an idea, too, of, you said it tends to be a lot of younger individuals. I remember doing a story on a video game company years ago out on the West Coast in conjunction with, I think it was Stanford, that either had a program, that was just specifically geared to teaching people to kind of how to be in the video game industry. What do they get paid typically?
Yeah, I mean, it varies drastically. Like if you're in San Francisco, if you're an engineer, you could be making over six figures. You could be making 150, something like that. But then again, you look around at Facebook and Google, and you could be making double that. So it's all relative, right? Yeah, I mean, it can really drastically differ depending on your discipline, depending on your years of experience, depending on whether you're at a big company or a smaller company. But in general, the people on the bottom of the totem pole, the QA, which is quality assurance, the testers in the video game industry, they're the people who are paid to find all the bugs in games. They're making around, usually close to minimum wage, maybe not exactly that, but $20 an hour, something like $18, $20 an hour. And then you can kind of get bumped up over that as you become, if you're a junior designer, maybe you're making, I don't know, 40, 50,000 a year, and then you kind of go up from there. It is by no means a well-paying industry. It's not banking or tech or anything like that,
right?
Unless you are at the very top, unless you're in the C-suite.
Well, you do have a chapter called Workaholics, and you talked about some of the different individuals that you talked to. I mean, a lot of industries, there's a lot of workaholics. I've been in the media industry for a long time, and you work a lot. It's just the way it goes. What's different, though, about being a workaholic in the video game industry?
Yeah, I think it's a very different. I've been in media for
you know
for 12
it
years now, and yeah, I've been there for sure. I think there's a lot of differences, but one of the key ones for me, at least, is that when I'm working late on a story, or when I'm working late to cover an event or something like that, I may do it for a week. I might put in an extra weekend here and there. In game development, it's often so prolonged and sustained that it could be months and months of just like not seeing your family, working 6 days a week, working 12 hours a day. And that's often what we see. And those are some of the stories that I've covered over the course of writing about the video game industry, is that it doesn't seem to end. And I don't think you'll find many people out there who would object to like a couple weeks of overtime here and there. It's just when it goes on and on for months on end, even if you have a deadline in sight, it can just be hell. It can really just eat away at your personal life and your mental health.
Hey, just got about 50 seconds left here. What surprised you in doing this book?
Yeah, the thing that surprised me most was just hearing the same story over and over again. Hey, Jason, I'm burning out of the video game industry. I'm leaving the video game industry. I'm going someplace that treats me better. Or like, yep, I went through a layoff. Every single game developer you talk to, it's harder to find someone who hasn't been through a layoff than it is to find someone who has. And that to me is really sad. And it's just, I think one of the reasons that I wanted to publish this book is to kind of put a spotlight on this stuff and bring it to more people's attention. And yeah, I hope I hope it resonates with people.
Well, it's a great read and really fun to talk with you about it. Jason, thank you so much. Good luck with it. Jason Schreier, he's Bloomberg News technology reporter. As we said, his new book is Press Reset, Ruin and Recovery in the Video Game Industry. And again, also author of the bestseller Blood, Sweat, and Pixels. And you can check out more at Bloomberg.com, also at BusinessWeek.com. All right, that's going to do it for the Tuesday edition of Bloomberg Business Week. Quite a volatile day, although finishing pretty much at our best levels of the day when it came to the NASDAQ and the S&P 500. Still down about 473 points on the Dow Jones Industrial Average. The NASDAQ, though, with just a 12-point gain after being down roughly 2% earlier in the session. Keep in mind, we've got a bunch of inflation data to get through, as well as retail sales data come Friday. For the whole Bloomberg Business Week team, have a good and safe evening. For Tim Stedovic, I'm Carol Masser, and this is Bloomberg Radio.
heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.